Okay. All right. Hi, everybody. Welcome to a second iteration of Crushing the Case Comp. But as mentioned last time, this isn't just a strategy to crush case competitions. This is a strategy to crush life, to crush businesses, to crush business ventures, all of the above. Okay. If you've got this methodology down, you can use it forever. Tracy was just telling me about how she still thinks about this in her work context every day, and this is what she uses to solve problems every day, even in a marketing context, right? So this is a great kind of framework to use for the rest of your life. So if you immerse yourself in it, if you practice cases, I did send you out a bunch of cases. I think there's like 12 cases in a folder somewhere for you guys to read, practice, challenge yourself. They're from all over the world. They're from different industries. It'll really give you great insight into what kinds of problems businesses have and how you guys can solve them. Okay, so that's high level. But we are super lucky today to have a very special guest. You all already know me, but I want to introduce my very dear friend, Vincel van der Merwe. Vincel, will you come up here? I just want you to say hello, and I want you to tell them who you are. But before he does that, I just want to say, literally, guys, you know when I put together the roles and I said somebody needs to be the finance rock star, I was literally referring to VZ. So he is the god of all things finance. Please listen to him, not me, when it comes to finance. VZ.
I've spent 10 years working in the finance and investment industry. I did MBA the year before. I started the year before Shivani. I did the modular MBA at UCT. We met in my second year and her first year. I had to do the case competition twice. I didn't make the team in the first year. As Shivani said to me, don't have enough respect. But luckily, because I don't, I met her in the second year, and we made awesome in the competition in the second year and in Canada. So I'm happy to be here, and I hope I can help to make this experience a little bit better for you guys. But you're in very good hands with Shivani.
Thanks, VZ. VZ texted me last night and he said, if I have a 71 deck slide deck, is that too much? And I was like, yeah, but no, but
I had a lot of fun going through all the old slides of the competition. So I went through the finals and the semi-finals, and I just make so many stupid mistakes. So I'd like to show that. But I'll put it in the back and you can go through it.
Amazing. Thanks, VZ. So VZ is going to take us through the last part of today. So how we're structured today is, let me just go over this quick agenda. As usual, we're going to start straight with cases. The best way to learn is by doing. Thank you to all of those of you who did submit your cases. I went through them last night. VZ went through them. So we're going to have you pitch to us today so we can hear a little bit more about those. We're then going to talk about case analysis today. For me, going through all of your cases, this was a really weak spot. It's a big weakness, but that's only to think of it in developmental terms. Okay, that doesn't mean you guys are bad or good. It just means you're not getting there yet. Okay, without analysis, you cannot have key issues. Without analysis, you cannot have good recommendations. So that's why we're going to focus on that just a little bit today. We're then going to talk about what would have been, in my mind, ideal solutions to this case. But that is only one solution. Everybody has different solutions. There's no right answer ever. And then we're going to go into what a good implementation looks like. And finally, we're going to close with a lot of finance. So he's probably going to have the last hour of today to coach you guys on finance because he's going to take it from scratch. It's going to be really, really valuable, especially for those of you who come from a non-finance background. He's really going to break it down for you. Because all of you should be able to do some amount of finance, okay, regardless of what space you're in. So you'll find VZ's insights really helpful. Okay. Does that sound good? Okay. So in full disclosure, by the way, guys, TransferWise was the finals case for John Molson in 2019. So it is a very difficult case. What did you guys think about the case? Lynn is like, what? It was unnecessary. The whole case was unnecessary.
We were just minding our business.
What about the rest of you? What did you guys think about the case?
We all had to do a crash course in blockchain.
Yeah. all right. Okay. I like it. Cool. And that's in 2019. Hey, guys. And today we're sitting in 2024. Like, this is quite ahead of its time.
I actually enjoyed it more than the first one. I felt like I understood it a bit better.
I like that. What was the difference for you? Also, sorry, do they need a mic or can everybody online hear them?
The sound in this class is apparently a lot better than the one we were in last.
Hey guys online, can you hear people from the audience saying stuff?
Loud and clear.
Yes, we
Oh,
can.
really? Okay, but am I super loud for you guys or is it okay?
You're super loud for us. I'm joking.
You're
I'll take
just
it.
fine.
Thank you. Amelia, go for it.
I was just saying that I don't know if it's because it's the second one, so having gone through, what you taught us after the first one, it could be that. But I just felt that I could dive into this one, whereas with the other one, I felt like I had to take a few steps back just to dive in.
I hear you. Yeah. How many of you tried to do the speed reading and then case the way we talked about last time? Did you do it? You guys, did all three of you? Anybody online? Did you guys try to do like speed reading?
Yes.
Why, what-
Yes.
Amazing! Yandre, tell us
Yeah.
about your experience.
Did it work? Yes, it did. I don't think so. What it highlighted to me is that they want to build a sustainable business, and it's not so much focused on blockchain.
Really? Interesting. I like that, right? So if you just read, so I don't know if you guys remember what we talked about. You first just read the intro and then you read the conclusion and you don't worry about the stuff in the middle. It helps you really consolidate what the case is actually about instead of getting stuck in the deluge that is the 20 pages in between, right? So I'm really glad that some of you were able to experiment with that. And did you find that you were able to read the case much faster, having contextualized it like that? Okay, I'm getting a lot of yeses in the room. I want to say I was reading this last night, and guys, this was such a dense case. I put a 20-minute timer for myself, and I needed 10 more minutes. Like, it was a lot because I was like, I don't get it. Like, I just wasn't landing it, and this is the second time I was doing it. So I'm very interested to see all of yours, and very keen to explore together. Yeah. Okay. So let's see who's coming on up first. Do you know where their decks are? Is it just this thing? Yes. Okay. Amazing. All right. So I'm going to call on group number 5. Group 5. Group 5.
Yeah.
So just for today's structure, all of you remember you have 20 total minutes to present, max, okay? So that's everything. And then VZ and I are gonna attack you with questions. No, we're just gonna ask you questions. But guys in the audience, remember this is an opportunity for you to listen very keenly and also ask questions because you can't change your slides anymore, so it doesn't matter. All you have to do today is be present this morning. Be really present in the moment. Yeah? Okay. I'm gonna sit down and I'm gonna turn on the timer and then I'll let you guys go, okay?
Okay, so we have 2 members online. It's a handheld mic for you if you need one, just in front of you.
You want a mic?
Every time. Whenever you want a mic. Tommy, you guys ready online?
Yeah, I'm ready.
Yes. We can shoot.
I think they must just let me know when the timer goes.
Okay.
Everybody ready? Okay. Team 5, go for it.
Hello, everyone. This is Team 5. I have Luen, Teriz, and Kudzai, and my name is Tammy, and we're doing the TransferWise case study. Next slide, please. TransferWise is a fintech leader with big plans. We did a situational analysis to establish the company's current status, and this is what we came up with. Their strengths: TransferWise saves you money. It's a cheaper and clearer alternative to banks for international transfers. Sending money abroad is fast and easy. It's like sending money to a friend. They have grown quickly and they're a major player in the fintech world. They are profitable and they have strong partnerships with banks. However, they have challenges. Their core service isn't super new, but keeping up with regulations and preventing fraud is a big job. They're still new to the finance industry, so there's some room to learn. And there's some opportunities. The blockchain technology could make their service even cheaper. They could offer more financial products, debit cards, loans, and maybe even virtual bank accounts. By keeping customers happy and attracting new ones, they can grow even more. Next slide. The future. In 3 years, TransferWise wants to be the best place for safe and fast international payments using blockchain. They will combine this tech with tracking software to be the most trusted name in the business. By offering a wider range of products, they can grow their business even further. And then I'll take you over to Kudzai. Next slide.
Okay, thanks, Tammy. And moving on to the key issues. We identified 3 key issues affecting TransferWise. The first one was to do with regulatory compliance risk, where we noted that they lacked the expertise to manage the complex anti-money laundering situation, as well as fraud compliance across the globe where they operate. In terms of technological disruptions and innovations, the key issues that we picked were to do with blockchain that is growing in the market. We also noted that they had a limited number of products of product line for a competing pool of customers, and they also lack innovation in terms of their business model. And the third key issue that we picked was related to growing competition in this business, where they were facing competition from other financial services. Next slide, please. In terms of our recommendations to try and address these key issues, we categorized these in terms of long-term growth, medium-term, and that's addressing value, and short-term, which is also talking to the long-term value. So looking at a long-term growth, we suggest that TransferWise embrace the future, where they invest in blockchain research and development to develop their own and to develop and secure efficient remittance platform. In terms of partnering for success, we thought that was also a key long-term consideration, where they would collaborate with blockchain startups to access cutting-edge technology and expertise. Additionally, they could also consider revolutionizing their payments, where they offer blockchain-based remittances as a game changer for their customers, which could also assist them to save even more. On the long-term value, they could also consider making travel with ease an option for their customers. By this, they can consider introducing a traveler's card with 0 foreign transaction fees, making international spending seamless. On strategic marketing as well, which also talks to medium-term value, they could consider partnering with airlines or airports and other travel websites to reach every globetrotter. Moving on to the third recommendation, which is on scaling systems for high inflow currency. They could consider smarter systems where they leverage machine learning to predict peak transaction periods, e.g. in places like Haiti and Philippines. They could also consider resource optimization, where they proactively allocate system resources to ensure smooth transfers during high volume times. Next slide, please. Moving on to the decision metrics. We identified the 5 pillars, the TransferWise 5 pillars, which basically price, trustworthiness, speed, convenience, and coverage. So we looked at the first one, which is zero charges, which talks to their value of price. And we noticed that that would also assist in terms of the blockchain, and expanded products would also assist in terms of achieving that zero charges criteria. Trustworthiness, we noted that machine learning and expanded products could also assist them to get to that. On speedy services, blockchain technology, as well as expanded products and machine learning could actually be the vehicles that they could actually use to achieve that. Coverage across countries, the blockchain technology can assist them to quickly achieve that, as well as the machine learning. And lastly, a seamless experience. All the three, which is blockchain, expanded products, and machine learning, they also talk to them achieving a seamless experience for their customers. We also considered two other options or alternatives that they could also just focus on, but unfortunately, but we also realized that they were not going to offer as much value as those other three, which is blockchain, expanded products, and machine learning. And the alternatives that we thought about, but well, they may not have to pursue them for now, seeking funding as well as hedging currency. Next slide, please. I think at this stage, I'll hand you over to my colleague. Over to you.
Okay, so to achieve on our 3-year value promise, this is the high-level implementation plan that we have. We'll walk through the blockchain part of it all, a separate slide, as that is our big bet that we're going to put forward. And we'll just quickly take a look at the traveler's cards and the machine learning recommendations that we're putting forward. So the traveler's cards, or TravelWise, as we like to call it, sees us really focusing on the US market as one of the countries with the highest outflow of remittances, and using them in terms of their travel, use TravelWise. So they won't just be sending money to someone else, they'll actually be sending money to themselves. So how this would work out is we would start within a 6-month period of creating the US credit account for those kind of travel accounts. And then we would really have to start going into the marketing across our airlines and airports to really target our US customer base there. But also we have a lot of strength in terms of our ACOs and our partnerships and our referrals online. So those two would work concurrently to launch that product and tap into a new consumer market. Hopefully with some of that, we also want to take some of that venture capital that we were initially going to put into additional reserves in Haiti and Philippines. And instead, let's deploy a machine learning model. So that machine learning model will take a historical look at the data to identify patterns of high influx, where the system can't really keep up with all of that demand, to move around some of the system resources, ensure that seamless experience. So it'll take about 6 months to create and deploy that model. It can all be done internally with our existing resources, and then it can be deployed to monitor and adjust. It is a learning model, so it should provide efficiencies over time. All right, with our blockchain thing, we're going to embrace the future. So there is some nervousness about blockchain and going against the trustworthiness. But if you just research a bit, it actually offers more traceability. And if we layer our existing platform and partner with our PayPal friends, we can still become the market leader in producing that. So this takes a bit of a longer time frame. So the first step would be to engage with PayPal and leverage their existing knowledge and technology in blockchain. Still, within those 6 months, we don't feel like we're getting to the point that we want. There are other blockchain startups to engage with, so we do need to add that on into the next 6 months, going into the 12-month period. During that time, we need to establish an innovation and tech team dedicated to the blockchain technology. And as we're ramping them up, they'll need to start building the user journey, the business requirements space, and start understanding how the platforms will talk to each other. And we'll put that out. We'll then start testing, and then at around about the 18 to 24-month mark, we'll launch the EU. Reason being, we need to take a staggered approach. We're going to have to learn, pay our school fees, improve, iterate, and we're quite comfortable in the EU markets. Once we figure those things out, we'll launch to even more markets, hopefully serving those countries where people actually have less money to afford the transfer fees, getting to our ultimate vision.
So we took a stab at the financials, considering both the revenue.
Please use the mic, you're very soft.
Still not. There we go. Okay. So we took a stab at the financials, considering both the revenue and the net income of the past 3 financial years that we received. We considered that with the first year rollout, considering the travel-wise and also then we look into machine learning, that we'll have a year-on-year growth of 6% in the first year. In the second year, we considered that that will increase to a 12%. And lastly, in the third year, wrapping up the rollout of the blockchain technology into the market, we considered that that will increase our revenue by another 16%. So we looked into the fudge factor and the financials between the net income and the revenue, and considered over the 3 years that there will be a total growth of 39%, and that we'll have an increase in our net income by launching our strategy that will increase by 4-folds. We highlighted the 5 risks with our strategy implementation, and we considered that all 5 of them will have a high impact on our strategy going forward over the next 3 years. First, like Lulu touched on, is the cybersecurity and traceability concern. In our current business landscape, that is still a high probability of that happening. In order to mitigate that, we considered that we'll both track the number of threats and or complaints and on breaches, but we do hope to leverage on the blockchain technology and the secure platform, and also take the learnings from the 2-factor authentication that TravelWise has already incorporated. Secondly, looking at cryptocurrency volatility, on the volatility of cryptocurrency exchange rates, we do see that there might be severe crashes, which might put our customers not at ease. So in severe cases, we'll default to the currency platforms that we already have in place. That would be a backup plan. Thirdly, as TransferWise currently is a remittance transfer platform, we do see that there might be a bit of a reluctance to adapt to the newer blockchain, and that might skew our customer base. So our head of marketing will monitor the number of blockchain users per month, and then consider ensure our cross-channel marketing that we put our customers at ease going forward. Then, like Luan touched on, we do leverage that partnership with PayPal at this point, but we do see that we have a current partnership that's strong and in place, but going forward, that might put the strategy at risk. So we might need to look into strategic partners that supports our strategy with the rollout of the blockchain technology going forward. And lastly, the errors in the platform, also a very high risk. All new technologies has a bit of a teething issue, as we have to work it out over time. But like Luan mentioned, measures in place is we'll start small in Europe before embarking on our bigger market and going globally. So to summarize, we identified the key issues as compliance and risk, the technology disruption and innovation, and then lastly, our growing competition. Like Tammy mentioned, in order to grow our revenue by 39% over the next 3 years and delivering on the value promise like Tammy explained to us, we'll have to embrace blockchain technology going forward to establish TransferWise as a leader in the field. We aim to do so by zeroing our transfer charges and giving more value to the customer. Secondly, we would like to expand our product offering by embarking on our TravelWise card to travelers in global markets. And lastly, to scale our systems with machine learning for high inflow currencies. Thank you. I would like to open the floor for questions. Just me, that's all. Or in general.
No, I'm going to open it up to the audience. Does anybody have questions? I have a lot of questions.
I saw the book.
Also saw the frown on the page.
That's my normal look.
in a great way. I'm gonna start with I thought that some of your recs were very great. But I have questions. I'm gonna start with questions. Guys, where's your analysis? Like you have no analysis to back up your key issues. Like, based on what are you saying there is regulatory compliance or competition in the market? There's no competitor analysis. There's no product mix, market mix, like a BCG matrix. How do I know we need to enter the US? Why travelers cards?
Okay, so yeah, that was part of our kind of SWOT analysis. We tried to establish that quite succinctly. Because there isn't 20 minutes sounds like a lot, but as soon as you start counting the slides. Yeah, I take that note, but that's really where we want to just kind of place the business within its context where it is, where it's doing strong, but within the opportunities and threats.
Like I don't see on your opportunities anywhere that says expand, like US market. You see what I mean?
Okay.
So how do I know that the US market was a traveler's opportunity? But that your whole recommendation relied on that.
Oh, okay.
So I'm not bought into that recommendation. It's a great rec, but you didn't give me enough backing. Yeah. Like there's no way for me to be bought into this idea because you didn't take me on that journey, right? Yeah, that's a small example. I think in one of your key issues, if you can go to the next slide. Okay, sorry, back up. This value promise, guys, you did a great job. You're one of the only teams that got a good value promise in. Hi, everybody, this is for all of you. So a value promise, a lot of you didn't get this right, but this slide is to tell the client what you as the consultant are offering them. What is the roadmap that you are creating for them? So, hey, it's a 3-year strategy to get TransferWise to 0. Okay, that would be like a succinct value promise with like a couple of KPIs, guaranteeing 49% growth for like an X customers. That's a value promise. A lot of you missed this, so this is a good example of a good value promise. Like, good job. Next one. So here you guys made a statement which says lack of innovation in their business model. Guys, the only reason TransferWise is successful is because they're an innovative business model. That's their whole identity. They're literally saying we are disrupting banks by being an innovative business model. So I found it interesting that you guys asserted that they had a lack of innovation.
I suppose a better statement would have been scalable.
Yes, right? Because that is, if you read the case, that is the actual problem, is that the model is innovative, but it's not scalable. So this is an inaccurate statement. And imagine like if I was the owner or the founder, I'd be like, what are you talking about? That's like our whole modus operandi is to be innovative, right? Do you want to go next? I have like 2 pages.
I love them all.
And I want to just add on to what Shivani said. Whenever we present in a case competition, he's the founder and I'm the finance director.
Sorry, but we can't hear you online.
Sorry.
I'm not sure if it's just me or the rest of the colleagues online, but I'm struggling to hear you.
It's all the finance people are nice and quiet.
Yeah, so the 2 of us are the executives or the directors of the business, or the founder, and I'm the CFO, whatever it is, in the case study competition vibe. So you always, and we'll speak about that a little bit later, but you always have to.
Sorry, can you please speak to the mic?
This is better.
Yeah.
Okay.
Yeah, much better. Thank you.
Sorry about that. So what I was saying is Shivani is the founder of the business in this case, and I'd be the CFO or something like that. So in a case competition scenario, and I know this is a training session, but in the competition scenario, you have to visionary founder with a unicorn company, and you on the slide back or innovative or something like that.
Terrible. Sorry.
No, and it's just you can see how that comes across. I'm thinking I'm the financial guy. I'm thinking my business grew by 50% last year in revenues. It's quite fast growth. You're not speaking about this business at all. You're saying I have to scrap this and go to start a blockchain platform through a partnership with PayPal. might or might not work. We're quite small compared to them. So we've got those kind of questions up front. So we'll speak a bit more about that in terms of being a little bit conservative in some of the. You can have kind of moonshots, but you have to address some of these blockchain issues, obviously. But it's always good to focus on the bread and butter. It's quite a good business. It's growing by 50%. We've got a few issues in terms of. Okay, let me pause with the comments, and I don't obviously it's all constructive. We've got an issue that I'm quite worried about, and that issue is the currency mismatch. So we've got a race to zero, and the reason we can do these transfers for people quite cheaply is if our European people that want to send money to the UK, for example, matches the people that want to send money from the UK back to Europe. So if that balance isn't there, we've got a mismatch, and we've got to go to the bank with that extra currency, and that costs us, I think, 3 or 4%. But we want to offer that to our clients for zero. So the mismatch for us in the finance department is quite important. You did come with a recommendation on the US. So what that looks like is that we're going to get a lot more US dollars. How does that address our current issue with our FX mismatch? And does it create a new issue for us because we're going to sit with a whole lot of dollars? And do we have a client base that are going to that are sending back, and they got to is someone sending back money to the US from Europe? Or what are we going to do with all these dollars now that we're going to get?
I look forward to the finance team.
From the if I'm gonna go with that's where the machine learning comes in. Try and smoothen it
out. So you would like to collaborate both with the machine learning, checking your inflows and outflows, and maybe distributing it across where your higher risk areas and your higher inflows and outflow areas would be. So, Johan, any add-ons?
Does that make sense? Is that also conversion, spreading the currency? No. Okay.
It's all right.
Our inexperience is shining.
No,
This
it's
one
not
done
an
with-
experience. Yeah.
Playing a game, right?
I think it shines the light on our storyline, our narrative, and how it pulls through the golden thread throughout all your initiatives, and how you have to catch 22 yourself, questions, and pulling it back to your recommendations as well. So thanks.
And if I can ask another question, obviously the race to zero is a big issue. I don't know if I should speak there. The race to zero is a very big issue for us. It's becoming cheaper every year, and we're cutting up our fees to our clients every year. You speak a lot about doing these transfers through the blockchain for zero cost and offering a zero cost service to our clients. It's not going to bring us income. Are we going to increase our revenues?
That was really the idea with TravelWise was that would not be a zero cost service. So it was idea to like make that part more profitable because it's a very specific product to make sure that you can make remittances zero cost. So adding to the bread and butter.
Can I speak to that?
Sorry. Hello. Hey, guys. I actually want to speak to this, if it's okay. I'm going to share a really quick slide because I think this is really important. When you're suggesting a new approach, this is what this team is doing. This is why analysis is important, guys. And you guys none of you did analysis, but I'm giving you an example of what I'm talking about here. Okay. So in this instance, when you did analysis, or when you do analysis, you would have used something called the Ansoff matrix. That's to decide whether to enter new markets or to have new products. According to the Ansoff matrix, what they're doing is they're introducing a new product in a new market that they don't play in. That is the riskiest strategy ever. And it is highly unlikely to work out because you don't know the market and you don't know the product, right? And if you think about it, in this instance, I get it. They were trying to hedge and be like, okay, we need another revenue stream. I get it. They're trying to go to zero with blockchain. That's why I thought it was a great recommendation. But you should have taken me on this journey and been like, how are we actually managing this? Why don't we introduce TravelWise to Europe. It's a market we really know well. Those people travel around the world, and then we can make revenue from that. And they're 78% of our market. We can really tap into it. If you're going into a new market, damn, all the US travel credit cards offer you free exchanges, all of them. Like, why would I go with a random European company for my travel card? You know what I mean? So analysis is really, really, really important. If you guys would have done analysis, you would have gotten to all the points that VZ is asking you. Yeah. Also, sorry, guys, this isn't a grillage. This is like a learning.
I know.
Okay.
It's just because we're the first, you know.
Yeah, no, it's good. Amazing.
In your shoes probably 50 times, so don't.
And we got grilled every time.
Okay, that's great. Thank you.
As well, so.
In terms of just regularly going through it, I must say, guys, I was very impressed with your decision matrix. You can go next. In the sense that you use something that the case already gave you as aspirational for what the company wants, like in terms of criteria, decision criteria. Your decision criteria can be anything, everybody, but this is a really quick win. The problem here for me was that you guys like scrolled past what your alternatives were. So you just put two massive words on there: seek funding and hedged currency, which is like huge, but you didn't explain what your idea was there, and you breezed past it. And I think maybe with this massive finance CFO guy going there, he's like, wow, but those are amazing alternatives we could have considered, but you didn't even do it, right? So that's for me is a bit risky in a finance case to suggest really finance heavy alternatives and then not even justify them. Is there anything you want to? All right. Okay, we already talked about TravelWise in the US market. I think that's very risky. And then the machine learning thing, fam, like what was that? That was like you guys just threw words in.
Oh, sorry.
No, it's okay. But machine learning isn't going to solve your inflow outflow issue. You guys just said it's going to solve for systems resources. The money still isn't in the country. If I'm in Haiti, I still don't have Haitian whatever it is monies, which is the problem I'm trying to solve. The tech isn't solving the fact that there's no money that's outflowing, and that was the crux of the issue of the whole case for me. Also, I would say that is the inflow outflow issue. And then for finance, this is something that I saw across all the cases, but I would like to see more it moving forward. You guys didn't tell me how you're funding this. So you have a super expensive possible blockchain technology thing happening. You guys are going to start doing this machine learning thing. You're going to introduce a whole new product that's going to require like marketing, research, a lot of tech. Like, how are you going to fund this business? Like, where are you getting the capital to fund this project? Finance.
So there was mention of the multiple investors with money to serve or address the issue in certain countries. So the idea was to push that.
But it's not on here. If it's not on here, it wasn't an idea.
So obviously the company did raise funding. So you could, firstly, I would want to know how much all of these things cost, because doing this blockchain thing and learning thing, and I'm like old finance guy, I don't know what all these things mean. I'm sitting on a pot of something like 400 mil. You want to spend some of it. I want to know how much you want to spend. Then I want to know, I look at firstly with financials, it's usually good to start with drivers. If this company has got decent drivers, you know how many customers and transactions they do. I'd start at the top and say, I currently do, can't remember exactly how many, I think it was 4 billion each month, 4 million customers. So I'm going to take my customers from 4 million to 6, but my fee is going to go down from 1% to 30 bips or whatever it is. Because now this makes sense. Now you start building a picture for me. If you just have and everyone does this, but everyone's got a revenue slide up and to the right. But if you can link it to drivers, then the story makes sense to me. And now you can link those drivers to your analysis. You said, probably didn't, but if you say we've got 4 million customers now, we think we can go to 8, you would have addressed it in your analysis. This is a massive market. We're growing fast. How many million people in the UK and Europe, whatever it is. So you can color the picture in for me. Now, as a finance guy, I look at this and my business is growing by 50%. per year with my current offering. Spend all my money on these three things, and I'm going to grow over the next 3 years at 13% a year almost. So my growth is going to slow down with these new initiatives. So already, a simple thing like that will obviously, doesn't matter if all your other things are perfect. If you miss something small like that, it kind of loses a lot of credibility in a competition. Another thing I'd ask or think about here is profitability goes up to something like $30 million. I'm a unicorn business. My market valuation is more than $1 billion. Is that enough? Well, my shareholders, the guys that just put 400 mil in this business, Branson et al., will they be happy with this level of profitability? I'm sure they invested for much higher growth, much higher. So it's always good to think about, we'll repeat a lot of this later, but this is a venture cap business, venture cap investment. So you can already think what level of returns those investors would require. And you can almost backward engineer that into your models here, because you're going to have to show them that you're going to be able to achieve that. If you want to raise 400 mil from me in a risky business, and you say, okay, I'm going to make 30 mil in 3 years' time, I'm not going to give you my money. So these are just kind of things to, and we'll speak a lot about that today, how you want to triangulate and link all these different parts to each other.
Okay, my last point is, you guys said you're gonna guinea pig your new stuff in Europe, right? So you said you're gonna experiment with it. I think that's super risky because that's 78% of your market. If you fuck up in this market, you're losing your largest client base. You're gonna lose trust in 78% of your customers. I would guinea pig this in a tiny unknown market, test it out there. If you fail in that country to launch, you'll have lower risk and it shouldn't be a bigger problem. Okay, guys, actually, believe it or not, I'm a sucker for innovation. So for me, this was the best. This is the best presentation today. That's why I called you guys up first. I know it doesn't feel like it.
For me, it was really, really good. It was a very complex case. I know, like, there's a lot of moving parts, but you guys didn't get the primary key issue, but for the key issues you identified, you tried really hard. And you got the fact, you're one of the only people who got the fact that if revenue is going to go to zero, if we're going to zero with transactions, we need an alternate revenue source. And that's what you guys banked. So in theory, you guys did really well. That's why I promise you, I know it feels like torture right now, but you guys did amazingly. So I just want to call the best team up first. Thank you so much, guys. Thank you. Give them a big round of applause. Thank you. Also for being super vulnerable and accepting feedback with such grace. I really appreciate that. Thank you so much, guys.
Thank you.
Thanks everybody. Wow, that was a toughie. Hey, I mean, I don't know how the rest of you feel if you're panicking with your own slide decks. Hey, don't worry. We're actually today we're only calling up 3 total groups. And for the next group, I'm actually going to call up who was like the really purple deck. Was it you guys? You guys, right? Blue, like the jazzy deck. Okay, I want like Team Jazzy deck up here. I don't know what group number you guys were. Group 6. Oh yes, the 5th element. 5th element. Are you guys soft? Do you need a mic or?
Hello.
Oh.
Good morning.
Hi.
Hi, good morning. Just let me know when you'd like us to start.
Okay, I'm getting my timer ready. All right, are we ready? Oh, are you just making like a star entrance from the corner of the room or something?
Yes.
I want to say. I'm excited. Okay. Guys, presenting the 5th element. Go for it.
Thank you. Thank you so much. Good morning. My name is Susiku from the Great Republic of Zambia. And I'm joining you together with the 5th Element Consulting Group. and I'll be introducing my team to you this morning. Next slide, please. So our presentation follows the following pattern. We have an introduction, a situation analysis. Then we're going to delve into the Porter's 5 forces analysis. That will be followed by an analysis or presentation on the owner's conundrum. We'll then go to the value promise. We'll give you a proposal. After that, we'll go into the financial review, and then we'll give you the closing remarks. So I'll now invite my colleague, Meekness, to lead you into the second part. Just before that, I'll give you a snapshot of who the team members are. We have Susiku, who is myself. And then we have Carl, our chief strategist. We have Meekness, who will be our facilitator for the day. We have Danielle, the implementer, and Amelia, our senior analyst. Meekness, pick it up from there.
Thank you so much, Susuku. I hope everyone can hear me. All right, good morning, everyone. So bearing in mind that TransferWise is a successful, innovative, and disruptive financial remittances company, we'll start with our overall assessment of where they find themselves and where we think they should be heading going forward in the future. So from the internal context, their greatest strength is how they have leveraged disruptive technology, challenging traditional finance institutions to foster cheaper and more transparent international money transfers. Despite this, a key internal weakness is their over-reliance on the partnerships with the banks in their current operating. There is, however, an opportunity with blockchain technology to enable TransferWise to offer faster transition at a lower fee. It's also the external threats, which is the competition from well-established rivals, such as the leading banks and emerging fintech startups that are in the industry. We are going to elaborate on where they should be heading more in the recommendation section of the presentation. So I'm going to move on next to the Porter's 5 forces analysis. With the external threats in mind, the evaluation of the competitive environment indicates that one of the biggest threats to TransferWise is the competitive rivalry in the industry, as there are many well-established players. In terms of buyers, substitutes, and new entrants, they all seem to pose a moderate threat to the business, but this is also countered by TransferWise's strong value proposition, the convenience that they're able to offer their customers, as well as value for money, and the fact that they're innovation-led. We see a low threat from the suppliers due to the existing well-established partnerships with the banks, even though we've mentioned that this is also a risk to the sustainability of the business. We feel that they can expand to collaborate more with reputable banking institutions in the future. So overall, the industry is moderate to highly competitive. Now, on the owner's conundrum, for us, it's a simple case of balancing between pursuing their mission and confronting the realities of the operating context. A balance between the desire to maintain the partnerships that they have with the banks and also facing the reality of the looming technological disruptions and regulatory constraints within the industry. They also need to strike a balance between exploring innovative emerging technologies like blockchain while still maintaining some form of business stability. It's also the need to strike a balance between pursuing the short-term profitability goals while also maintaining and ensuring long-term sustainability for the business. So in a nutshell, we summarize the owner's conundrum. How can TransferWise maintain its disruptive edge while ensuring long-term growth and navigating the evolving regulatory and technological landscape? So given this outline of the internal and external context, I'll now hand over to my colleague, Amelia, to take you through the 5th element, value promise. Thank you.
So here at 5th element, we're not only interested in creating value for you, but we want to show you that we are obsessed with something that we call blue value. This is a term we've created when we see opportunities to incorporate what is known as blue ocean strategy elements. So we looked at what we believe TransferWise can focus on in order to drive out value. If we look at eliminating high fees, which is aligned with your obsession with reaching zero, and also if you raise your customer satisfaction, your brand strength in the market, you can achieve what we call global leadership. By reducing costs, and we will talk more of that in our financial slides, by reducing costs, we can obviously increase our profitability by also focusing on increasing revenue. Also, we've identified a need to create strategic partnerships, and as my colleague pointed out, they need to be more refined, more defined partnerships because of the reliance in different markets and the different reputational risks that can introduce. So you love your disruption, you love your technology, and we see that. So we're talking about looking into the market, seeing what's available, grab that, and become more technologically disruptive at every opportunity. And all of that, when we combine it, we're promising to you a disruptive, cost-effective, innovative, and most of all, sustainable approach.
Hi, good morning, everyone. Now, let's move on to the recommendations. Firstly, we recommend a comprehensive review of your compliance, and we recommend to commence that now immediately in the third quarter of 2024. With these reviews, it will assist TransferWise to meet their international standards and manage risks that are associated with different regulatory environments. Next, starting in the fourth quarter of 2024, we recommend partnering with a reputable financial institution, distancing TransferWise from less reliable institutions, and strengthening your processes in anti-money laundering and fraud prevention. Finally, we recommend continuously working with leaders in anti-money laundering and know your customer providers, thus strengthening your defenses and keeping operations secure and compliant. We have categorized these initiatives into 3 risk levels: low, medium, and high, and have prepared specific strategic effective management plans to reduce these risks and manage your compliance. Moving on to innovation and agility. To stay competitive, we recommend investing in blockchain technology, starting a pilot project in the first half of 2025, making sure that TransferWise is improving in transaction speed and reducing costs, enhancing both efficiency and customer satisfaction. We also encourage a culture of innovation across all departments. This involves forming strategic partnerships with fintech startups, positioning TransferWise at the cutting edge of technology. The risks linked to these initiatives vary from low to high. We will address them by continuously training your team, adopting agile practices, implementing strong security measures to protect your customer data and maintain that trust. Moving on to security and technical challenges. We recommend commencing with continued cybersecurity upgrades in the fourth quarter of 2024 to protect against new threats. In the first quarter of 2025, we will set up contingency plans and conduct business impact analysis to ensure TransferWise keeps operating smoothly during any technical disruptions. We also recommend refining strategies for communicating during those outages. We've identified potential risks for these issues ranging from low to high. Our approach includes thorough testing, continuous employee training, and investing in backup systems to mitigate risks and ensure strong protection and operational stability.
Moving on to our financial review.
Thank you so much. We'll now lead you into our financial review. We'll start with doing a historical analysis of historical results in order for us to get some, to identify some key trends and then be able to craft a strategy for the future. We've done an analysis of revenues, costs and profitability for the period 2015 up to 2018. What we have identified is that TransferWise revenue has been variable, recording 100% growth in 2016 and 17, but this growth could not be sustained, as can be seen from the reduction in the growth rate, with only 56% recorded in 2017 and 18. This high growth rate of about 50% signals immense opportunity in this market. And you will see from the forecast that we are making that would like to leverage on this potential for high growth. When you look at the net profit margin, this one has been extremely volatile, rising to 10% in 2016 and 17, coming back from a huge negative margin in the previous year. But we also saw that this fell by 50% to 5% in 2017-18. The fall in net profit is evidence of rising operating costs, especially marketing costs that are not matched with corresponding revenues. So in our projections, in our financial projection forecast, we'll be looking at how we can cap costs using target costing methods. Then when you look at the total cost to revenue margin, the overall cost has been reducing from 168% of revenue in 2015 and 16 to 95% of revenue in 2017 and 18. However, high operating costs affect profitability. So there is need to implement a robust cost management strategy by setting clear expenditure thresholds. Then managing costs will help the company to generate internally generated funds to finance its ambitious expansion objectives. We can go to the next slide. So in this particular slide, we are looking at the forecast financial performance covering the period 2019 to 2025. And our focus is to increase revenue, very ambitious revenue targets. And then we are also looking to cap costs, basically targeting our costs to be no more than 45% by the year 2022 and 2023. So I'll go into those line items one by one. On the aspect of revenue, you will see that we are looking to reduce the amount of revenue that we are deriving from the European markets to 55% from 78%, and also to increase the revenue derived from the rest of the world to 45% from 22%. This supports the global strategy that TransferWise is seeking to achieve. So our revenue forecast is to grow by 10% in the first year. So in the first year, 2018-2019, we're being quite conservative, just trying to stay at bay at 10%, and then to increase that to 50% in the next 2 years, and then grow it by 100% in the last 2 years. These forecasts are realistic based on the trend analysis that was done on the previous slide. We're also looking to increase our net profit margin. So our new strategy seeks to significantly increase net profit margin by 25% in the first year, by 50% in year 2 and 3, and then by 55% in year 4 and 5. In terms of total cost to revenue margin, under the new strategy, operating costs will be predetermined as a percentage of revenue using target costing methods, and then the financial controller will be responsible for developing budgets that conform to this aspiration and to closely monitor these costs on a monthly basis to ensure that they do not go overboard. So in a nutshell, that's our financial strategy. We started by doing a detailed analysis of the trend for the previous period, and then based on that derive a reasonable focus for the period 2018 to 2023. Thank you.
Thank you, Sisiku Rockstar. Mr. Carmen, Mr. Hendrikus. We came here today to show you basically one thing. Right now, you're that cool fintech startup. Everyone wants to invest in you. But guess what? There's so much more for you to go and attain. You've addressed key issues. And I know that you're seeing other consulting firms. We don't take it personally, but all of them are going to come and promise you the moon. But we want to show you what we've done is address the key issues. We've spoken about implementation. Why? Because we have expected outcomes. We wrote here market leadership. That's our form of being conservative. We want to take you to marketplace domination. Yes, we want to fulfill our promise. You can read off the slide. But really, what we want to show you is that you're in a highly competitive environment right now. You're running red. What does that mean? You're a fish. You're a fish in the sea. Yes, you're a big fish. You're growing. But what you want to be is the only fish. You want to dominate. You want pole position. So while others are talking about the trade-off between costs and differentiation, we're saying do both. Why? Because you're obsessed with innovation. And like I love the word dominance because you could be a competitor or you can make them null and void. You can make them irrelevant. Why don't we have names of like MoneyGram on here? Because we couldn't remember whatever union is supposed to be. So in closing, you're disruptive, you love technology. We're thinking blue ocean strategy because we can see TransferWise on the waves. And when we combine all that, when we bring our fifth element promise to you, we will launch you into stratospheric results. And with that, we thank you.
That mic to BZ. Does anybody online or in the audience have any questions for the fifth element?
I have a question. Sorry. In the one slide, you said agile practices. I don't know if we could please go to that one. I think it's the second recommendation. That's okay. But my question was just, I didn't pick up any agile or innovation issues in terms of their operation. Agile is very much like a project kind of management methodology. I just want to know where that came from in the case study because I couldn't recall reading up on that before.
So yes, we agree that this is a bit of a high-level approach that we've given, and perhaps we didn't like formally stick to the PM, definition. But what we were trying to bring in is agility, because what we mean is when you're facing something, sometimes you need to pivot on your strategy and just So investing in blockchain, for example, it can be a threat, but if you can recognize how you can leverage that, you can bring in some agility in your strategic moves.
You rightly identified. That I'm concerned about both disruption and my compliance issues, these are two issues that we're concerned about, but they're very much at the opposite ends of the spectrum. It's part of your strategy, and you say there, I must invest in blockchain technology. In the finance department, we're seeing 50% growth rates. So why do you think blockchain is really disrupting us that much? Could you provide more analysis on why you think blockchain is disrupting us? Because my revenues don't show it. And secondly, in terms of compliance, it's an issue for us with our current system. Blockchain is pretty much an untested system. How's the compliance issues and money laundering issues going to be mitigated by that, or is it going to increase?
I agree with you that we could have put it stronger in the presentation, but that was actually one of the longest conversations we had as a team about this. And what didn't come through was that our feel is that you have to constantly be scanning the environment. So we see blockchain. Yes, it's not that big, but we need to see it and then see how big we think it's going to be, and then adopt it so that we are not disrupted. TransferWise is not disrupted. So when we spoke about the compliance part, we were thinking about education and also investing in that space and partnering. So what I'm trying to get at is that our actual thought was, if we adopt this, we will fund the compliance leg of blockchain in the markets where we see it being viable. And also what came up in the discussion was that there are marketplaces, countries that are ahead of the curve, and we would go there first, learn from them, then take it to a lesser known, invest in that. So once again, this golden thread of partnership was supposed to come through.
So just help me understand, we've got 4 million customers, 4 billion transactions each month. How much of that's going to go over the blockchain now, or are we still going to do it in the way we're currently doing it?
I don't know.
Are we moving some of these transactions to this new technology, or is this going to be a separate part of the business with a new client base?
It was supposed to be separate. It was supposed to be more like testing it, getting to know it, understand it, and then build a plan on that, so that we're not at some point caught in ways by this.
All right, I just want to confirm, so that's just like a testing situation. So what is your actual recommendation here? If blockchain is just like a side hustle, I don't really understand. Then what are we actually doing? What is the actual?
Recommending to proceed with a pilot project and then take recommendations from that pilot project to learn more through that project and do analysis in order not to miss that opportunity of blockchain.
I'm going to say something. Sorry, VZ, can I say something? Okay, so I founded this super innovative business. I'm sitting here in front of you guys. I paid you guys a ton of money to do this. The two recommendations are about regulation and security and technical challenges, which actually should be business as usual for us. In fact, we should sort our own shit out. So your only innovative recommendation is this slide, and you're saying it's just a pilot. So what is your actual, like, what are you solving for, and what is your actual recommendation? Give me like one answer.
The blockchain technology investment is the main recommendation, but we just wanted to start it to mitigate the risk of bringing something.
Maybe go up to your owner's conundrum if you don't mind. And I'll speak about this a little bit later. The last sentence in the case says, will TransferWise become a sustainable disruptor or be disrupted itself? And speak a lot also in the beginning about sustainability. So obviously one of the big issues here is whether we can make the current business that's doing well and gaining clients sustainable. I think those things are relevant, but I think the sustainability should have been placed up front. And I think if you then continuously think back about sustainability, because I think that's the biggest issue, yeah, and I think it's quite clear in the case, then I would ask you, okay, how am I making my current business sustainable by taking the money that I raise now, start a blockchain? Because it doesn't address my concern about how am I making this current business sustainable. The issues that I face there is my currency mismatch, my income, my transaction income that's going down all the time. So I need new sources of revenue or different sources of revenue. I still have this client base as a powerful asset. I've got a platform that's unique. And a lot of these businesses, if you think about other industries like even like Costco in the US, they it's like macro, but they sell their stuff basically for no profit. They have a subscription charge basically. So a lot of these type of businesses, if you scale and you're the largest already, or you're one of the bigger players, so it's a good thing, even though your margins are going to go down on this current offering. But you got to, the fact that it's going down is going to keep your competition out. But you got to figure out how can I make money through adding some other value to my customers. So the point really is, the sustainability should be, in my mind, be upfront here. And if you keep that in the back of your mind, a lot of these other things would kind of fall in place.
Okay, I don't have any questions. I'm just going to give you guys comments. Cool. Guys, you had an excellent VP. Like if you go next slide, or I mean, like, you know, you were on it. You know, you were like, It was, you guys power started the go, like the, I love the passion with which you ended and you started. I think you guys got really caught in a lot of red herrings. For me, like the technical challenges and security, that was a red herring. They already said in the case that they addressed it with two-factor authentication, and they're a tech company. They can sort this shit out, right? What they're trying to do is be sustainable, right? Even regulation, they can hire the regulatory bodies and do that, right? It's, I would have liked to see like a solid, meaty, how are you becoming sustainable? If you're going to zero, how are you making money? Okay, those are the two things you should have solved for. I think in general, across everybody, blockchain was also a very interesting red herring, but should be included in a way because, guys, I don't know how many of you know this, but blockchain, I mean, as a technology is as old as like 2009, even it's older than TransferWise. If by the time this case happened, blockchain hasn't already been mass adopted, I don't really see it as a massive disruptor to their existing business model. Like VZ keeps telling you guys, we're like what, every year we're doubling our profits and revenue or something. We're doing pretty well as a business. So I don't think blockchain was a huge issue. It should have been, yes, leverage. So I like that it should be a pilot, which you guys said, but then you also said that was your main answer. So I didn't know like what you guys were actually putting on offer. I felt like your finance slides were great, like a lot, like really meaty. But VZ can speak more to that. I think for me, what was still missing is how are you funding the strategy? I don't know. That wasn't clear to me. And then for me, analysis was missing. You guys did some analysis. You were one of the only teams that did Porters as analysis. But still, more analysis would have helped you come to the correct key issues. Guys, without analysis, you can't come up with key issues. All of your working backwards. You're coming up with key issues and then trying to do analysis to fit it. Yeah? Okay.
Before I get to the financials, and I want to add to Shivani's point. Remember, this is specifically in a competition scenario, right? And I think everyone here fell for the red herring, which is the blockchain stuff. So let's say you had a slide in your analysis, and I would even have it as one slide or really make it quite prominent. And I say, we identified blockchain as a potential risk. It's still developing. It's been around since, to a point, it's been around since before we've been around. Our revenues are growing. We're picking up customers. We don't think it's the main risk. And then you can address it kind of as you can do some research on it or whatever. You can stay on top of it through whatever ways you think. But if you make that point very clear that blockchain isn't the main risk, and you can with figures, you can show that. All the other guys are going to come present to you afterwards, all in the trap that you laid it, if you understand. You made it clear that this isn't a big risk. Everyone else says it is the biggest risk. And I think, so if you when you do a case competition, remember everyone gets the same case. And if it's a difficult case, everyone gets that same case. And I think if you do notice these kind of issues and red herrings, and if you can lift it out in your presentation, you can, and obviously plant those seeds in the judges' minds, because they're going to sit through all the cases. You can almost lay a few traps for the guys that come after you. Just think about that. And obviously, you're doing the case and working through a lot of stuff. But remember, it is a competition. The other guys are reading the same things. And the finance, I thought the detail was good. I wouldn't go into much about the history because we know our history, right? So a lot of this was analysis stuff. It's stuff that you would have done in your research, but you wouldn't repeat it, all of it to me. Some of the insights that I thought was interesting but contradicting was you speak there about we have a high growth rate of 50%, immense opportunity in the market. That speaks about our current business. So there's the insight, but we didn't address that we didn't focus on our current market there. But he saw that there. You speak a few times about cost-cutting strategies and cutting costs by 45%. I don't know where that was in the implementation at all. We speak here about reducing EU revenue, growing the rest of the world. That wasn't addressed in the strategy at all. We go up to more than 50% net profit margin. I think that's the next slide. That's a little bit too much. So if you think about what financial businesses earn in terms of net margins. It varies, and companies like PayPal would be very profitable. But if you have a business with a 60% net profit margin, you lose credibility, because it's frankly not. I don't know of such a business. We're currently struggling with like 6%, or I don't know what profit margin. You got to have a solid case why you think we can get 60. Then just the last thing that, and it's good to have a lot of data. So that's what I like about this slide. Data has to be right, because often in the Q&A, in cases and competitions, you focus a lot on these things. And if your numbers are right, then it's a good place, because you can show how you thought through everything. Here we go to a business earning 822 million net profits. It's a great profit margin, is a little bit of worry, or I don't know how we're going to get there. We've got a business valuation of 1.5 billion a year, and that's a PE ratio of 1.8. You got a business valuation at the bottom line, 2023, 1.5 billion. So if you see things like that in the financials, then someone's going to doubt this is an innovative tech company growing at a, what's this, even 2,000% over 5 years. It's never going to have a multiple of 1.8. So I'd be interested to know why you think our business is only going to be valued at 1.5 billion, and whether you think that's enough for the investors that invested in this. So minor things, but you got to be very careful when you put. It can be a very good thing to have a lot of data, but it's wrong. The judges are going to start picking at it, because they sit there and they're looking for something to pick at.
Thank you, Mr. Herring.
And well done on for your team addressed us as. I think what you did very well in the presentation was to remember. You can kind of do the whole role-playing thing and remember who you are and who we are and all of that. It's often, especially in the beginning, hard to kind of put yourself in those shoes, and you address it as a presentation to your class, but it's not in a competition sense, at least. So it's good to practice that.
Thanks, guys. That was really well done. Thank you so much. Thank you.
Awesome.
Yes.
When it comes to the financials, like slides, is it them? I don't know. I always feel like it's safer not to put too much out there that can be questioned. But I don't. How do you find the balance between what should be there and what shouldn't be there for financial?
How much confidence do you have in your numbers? If you're confident, put it in, because you can defend it if you're not confident. And we'll speak about that now, because some cases it's quite difficult. Some cases you have almost no financials, but you want to build financials. So you have to at least show that you can think, how much is this going to cost? And it's a very, very difficult thing. Most people don't get it right. But there are ways to kind of build it up. And that's why the assumption slide is so important. So and we'll speak, I've got a kind of a pack that I'll send out with a few examples, but to state your assumptions first is one of the most important things in the finance part, but also it carries the entire case. So your assumptions, it will start maybe with, it could start with market size in terms of number of potential users, or it could start with number of users we've got now, or users or clients, whatever it is. And you can infer that from the transaction costs. You can infer that from current revenues and stuff like that. But I would start with, we think you've got, it isn't stated in the case, but we think you've got, and I wouldn't say that, you can't say it isn't stated in the case, but we think you've got about 400 million customers, not 400 million, 4 million customers because of this and that reason. Your revenues is that much. We think that customers can go up to 8 million because this and that reason. The market is this big. Your uptake has been this fast. Our marketing strategy is going to reach X amount new potential customers. You're going to have this amount uptake rate. So if you start with the drivers and the assumptions, and those assumptions are reasonable,
If you tell me you're going to go from 4 million clients to 8 million, I can see that. Then you tell me, okay, well, you currently make $5 a client. I'm going to make 3 in the future because prices are going down. Okay, I can see that. And I can challenge the point. I don't have to challenge. We can have a discussion about $3 income per customer per transaction or whatever it is. But you're not making these kind of mistakes of just drawing a line, following the trend to the right. You can actually speak about things. So you start with assumptions. You can explain your assumptions, why you made them. And if they're reasonable, then you can use those assumptions to build a pretty decent model out. Requires a little bit of experience with some of the cases, but it's the best start. And most people don't do that well. I'll show you later that, but one of the finals was Disney. It was 19, I think. Funny thing, Disney is about half a trillion, 500 billion market cap company in the US. And everyone's implementation plan costs about $2.5 billion. So it was this is a whole big strategy. The one team, I think, had this content strategy and it cost them something like $20 million a year. And you're like, this is in the final. And you get to that point, and you're like, what are you talking about? We massive business, you come in here with a 20 million or something, I don't know, for content. So you got to be careful, but if you set those assumptions up first, then I think you have something to anchor to. If those things are reasonable, then you're going to get far.
Thanks, VZ. I also, just to that slide, I know what you're saying in terms of having like a lot, and we said having minimalist slides. With this, having a lot will help with the Q&A, like VZ said, but something that VZ did and we did is, with this slide, we would actually pull out red boxes and just slap them on like the key areas that we want to drive attention to. So if I just want to talk about, I don't know, my business valuation growth, then I'll just slap a red box on there, because in my presentation, I'm not going to talk about all of this. I'm only going to take them straight to my key point and move on. So they can come back to it in Q&A and ask me questions, and I don't spend 20 minutes on my
we usually started by saying, okay, we've got a full model built out. And we always wanted them to ask about the model. So we'd always say, we've got a full model built out. Here it is. For this part of the presentation, you see you got like 4 minutes. So I want to speak about revenues because you see a very big growth there. How are we going to achieve that? I want to speak about my cost cutting and margins, because that's a big driver here. And whatever else. And you want to link it to your implementation plan and speak a lot about that, reiterate a lot about that and how it impacts that. Then they can come back to the question. So we always said, okay, we've got a model. Happy to speak about it later. These are the 2 important things that drives the model. We just address that. You want them to come back to this afterwards.
Thanks. We're not going to do any more of the slides, but I want to say there was only one team who got, in my opinion, maybe the rest of you can defend yourselves, who actually kind of got the inflow outflow as an issue, and I believe it was Team 1. So good job, Team 1. Did anybody else get that as a key issue? I'm not wrong, right? Great. Amazing. Team 1. Okay, you guys got it, but then you didn't address it. So then it's all good. You addressed it using blockchain. Guys, using blockchain is still not going to solve the issue that in one country you have more currency of one sort than the other. So that's what the crux of this problem was.
I think
Yeah, go for it.
actually in as liquidity instead of in and outflow.
Yes, but you mentioned it in your bullet points, inflow exceeding outflows. Oh, sorry, is this a different team?
Yeah, it's a different team. So we had it in liquidity as well as inflow and outflow, but it didn't specify inflow or outflow.
Which team are you guys?
The 7.
7. Yes, sorry. Also, guys, 7 was amazing, but they kind of gave up on their slides. They just so I didn't let them present.
Yeah, we ran out of time. That was the thing.
They literally were like, finance, no money, no problem. I was like, great. Nice. But I must say, you're absolutely right. Team 7, I actually stole one of your photos because you guys did get it right. You guys actually understood what their innovative business model was. They're just moving money around in one country and the other. So I stole this diagram because it was a great way to understand what the crux of the problem is. And I think a lot of people don't get this when they read this case, but this is the key issue. all right, today. So good job, team 1, for identifying it. Good job, team 7, for drawing a diagram, but then not giving enough a shit to finish your deck. Guys, come on. I'm kidding. Good try, good try. I think you guys wasted a lot of time with your animations and flags and stuff, but that's okay. Happens to the best of us when we start out.
Giovanni,
Cool,
do you
guys.
mind if I speaking to the inflow outflow currency issue? I know our slide didn't really make it clear how we was addressing it, but I thought our team had quite an interesting solution.
Esme, what team are you guys? 7.
Team 1.
Team 1. Do you guys want to
Yeah.
just quickly speak about your innovative solution?
So, I mean, if you see there, we said lightning transfers through blockchain rivals, and basically simplifying it, excuse me, simplifying it is instead of using banks to buy foreign currency, getting your surplus funds from one country to another where it's constantly being depleted and having to pay those EFT costs and those currency rates that the banks give you, you use the lightning transfers through custodians in those countries, and they do transfers at 0.1% fee, and the transfers are instant, and you don't, as then TransferWise wouldn't have to own their own
blockchain platform.
let's say Bitcoin or whatever risky
Blockchain.
forgot the word now, but anyway. So
It's
in any
blockchain
case, what I'm
platform.
saying is that the suggestion was that they, instead of using the banks or having to buy foreign currency through the banks to shift their money across the globe as it's needed, they can use the Lightning Network, which is basically kind of a business-to-business TransferWise model, where you offer that kind of business instead of peer-to-peer for individuals. They offer it to businesses, and they can just leverage that from a business-to-business perspective. That's just in summary.
Is this Lightning transfer platform, is this something that exists, or is this something that you're recommending that they launch?
It currently exists in the market, and there are developers working on business-to-business transfers. So
this is existing business that does our model, but B2B.
yes.
Okay.
But through blockchain, not through the banking system. It was funny because
you
it
can
felt
build that out. It makes sense. I hear what you're saying. I think obviously going to have a few questions on that, and you haven't presented, so that's fine. But I think that's something you can work with probably.
Guys, I agree with you, Esme, and team. So a lot of what you recommended here for me also would have been like an ideal solution. I would have liked, I think in this instance, you didn't flesh out your implementation at all. So it was impossible for me to read between the lines. I would have liked to see more detail. You can go as far as actually mentioning companies when you do implementation. So you can say, I don't know what the name of this peer-to-peer or whatever business-to-business blockchain platform is, but you can say whatever, it's called Shivani. We're going to use Shivani to do this in this country or whatever, and test it out, especially in our low inflow, outflow countries like Haiti and Philippines. We're going to test it out using this model. Doing something like that would have given me a little bit more faith in this, but you guys did identify the right issue. So thank you guys. I want to give VZ as much time as possible to go over finances. So I'm just going to do a quick rundown of some analysis. Before that, guys, I talked about this last time, and we as a team made the same error in the case competition. Is the most important thing you need to go back to is always the drawing board. Okay, so what is a business supposed to be doing, and how are you driving value? Okay. So in this case, a lot of you missed what the core business of TransferWise was, right? You forgot that. You got so excited about new technologies, new everything else. You forgot that we're actually trying to make our existing business model sustainable. I would have really liked for you to go start from the drawing board again on these really fundamental things. Like, what is the need that TransferWise is trying to address? Okay, what was the need? Anybody?
Transfer fees.
Yeah, zero transfer fees or free remittances for people who deserve to remit to their families. Okay, great. Their product is this amazing innovative thing where they're just moving money in pots around. Great. That's their business model. The problem is that they have a sustainable competitive advantage because they're passing all their, it said there was like a line in that they're passing all their profits to their customers, so people love coming back to them. The only issue maybe now is their business model isn't scalable. Okay, so that's what you're trying to solve here, just focusing on their business model, right? We do want to go into maybe some products and services to have different revenue streams, but we should have been focusing on our business model here. So we should have really been talking possibly about process innovation and business model innovation in this case. The owner's conundrum was really straightforward. It was given at the end of the case. It was basically how to become the sustainable disruptor, sustainable being key of the remittance industry without being disrupted ourselves. The being disrupted ourselves may have been a bit of a red herring, but the key was to come up with our own sustainable way of disrupting this market. The SWOT, a lot of you guys put it on your slides. Guys, SWOT is not a good analysis to put up in front of a case or like a panel. The SWOT is a tool that you guys should use as a team to come up with your key issues, to come up with what your analysis is going to be, okay? It's a very busy slide to present that SWOT. Okay? That's for your information only. There are way, way better ways to present analysis, and I'm going to go through some examples of what I think would have been good analysis for this to convince the panel that you are on the right track. VZ, you want to add anything?
No, you can always include the SWOT at the back. So do the SWOT, that's your tool. 1 or 2 or 3 things that you think are most important, show those things and hammer it in slides focusing on those. Don't worry about all the other things you identified. Put it in the back. If the judges ask you, what about this little thing or that little thing, you can go down and say, we did identify it, but it wasn't a big issue because of boom, boom, boom.
Zandile, I see your hand, but we also have Tracy's hand. Tracy, you want to go first?
Question on the SWOT. When you do these for the case comp, do you have to qualify each of them based on the case, or is it just based on what you kind of know? You can't Google.
Both. Yeah, what you know is fair game.
Industry knowledge is. Zandile.
Morning. I just wanted to find out, well, 2 things. I work in the public sector, and if you don't put up the SWOT, it's like you haven't done anything. So how do you balance? I know obviously this is you're building us towards competition, case competition, but I'm just, in my day-to-day, I want to be able to apply some of these principles. So how do you flesh that out without necessarily explicitly putting it as SWOT? Because I know someone's going to put up their hand and say, where's the SWOT analysis? Because obviously that's the norm. That's the first question. And in the second part,
I can't do double barrel questions. I get lost.
Okay.
Amazing. Thanks, India. Guys, I'm not saying don't do SWOT. You must always do SWOT. But SWOT is like the most elementary analysis you do.
Oh,
like if you've only presented SWOT, I'm like, damn, your analysis is weak. That's like level 1 kindergarten analysis shit. Okay. We're saying we need to up it. So like VZ said, everybody is going to do their SWOT. You can put a slide, you can put it together, but put it in your appendices. So when the judges ask you, or in your case, if your client asks you, you always have the SWOT ready. When you write up your strategy in like a 25-page document, yes, you'll have your SWOT as an appendix. You're never not doing your SWOT. But I'm saying don't rely on the SWOT as your primary analysis. Okay? It's too much information and it's not leading me to anything. If I'm just putting up a big slide of strengths, weaknesses, I'm not doing so what. Do you guys remember last time we talked about so what analysis is the most important analysis? SWOT is just presenting data, like it's just presenting the situation as is. It's not telling me, what does this data mean for my business? What does this data mean for my industry? What does it mean for my customers? The so what is always missing from SWOT. So that needs to be like your base. It's the foundation to all analysis.
Okay, so I think maybe what I would need answered is then how do you present the contextual factors? Because you know, SWOT and Pastel, and you know, that's marrying the two to analyze the macro and micro environment. So how would you in a very clear way present the contextual factors if you're not, and I'm not married to SWOT or Pastel or anything, but I just want to find a practical way of presenting the contextual factors, because you must be able to demonstrate that you've taken that into consideration, or you're cognizant of what's happening around you and potentially in the future.
I have a, in the decks that I shared with you guys, there's a MWeb deck. Sorry, I don't have it on this computer. If you can open it, Zandile, for yourself, you'll see the first slide that we ever start with is something called situation analysis. A lot of you missed that slide in that format, and I would love to, let me just, can you guys?
Sorry to take you back.
Is somebody online? You guys can open it and share the screen if you want to try. But it's a phenomenal way to, in like 5 seconds, land context and give like a so what statement.
Okay.
You
I'll
know
have
which
a
one I'm
look at
talking
it.
about, Zandile?
Yeah,
The
I
blue,
remember.
it's like a blue deck, yeah. We always start with that. It's called situational analysis. It's just like boom, 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 like 4 things. What is the industry doing? What are we doing? Where are we playing? And then you can, it's a really quick way to always start your presentation.
Okay.
Yeah, can you share screen? Must I just click stop share? Okay. Guys, it's just gonna share it really quickly. Then I can talk you through that. Okay, so in this case, guys, so we're doing MWeb, we're presenting, and then I go, hey, we're Shivani, thank you so much, board of MWeb, for letting us present. And then we go next, and then I introduce the team, we are whatever. And then today we're sitting, MWeb, you are the largest private ISP, you're demystifying internet in South Africa. This is like a 10-year-old, right? Okay, you're the first provider of uncapped internet. Oh my God, look at what you're doing. But as it is, you are losing market share because competitors are coming into the market. So you see, with this one slide, instead of doing a SWOT and like having so much, I'm literally giving you the lay of the land, and then I'm throwing my OC down here. Guys, that's our OC. I didn't have to have a separate slide that says owner's conundrum. Judges don't know what owner's conundrum means. That's just a way of thinking for yourself, right? With this situational analysis, I've given a high level sitch, and then I've pulled out, what are we solving for? Okay.
Sure. Okay. No, this makes perfect sense, because I think now I'm able to say this is what's happening around me and what it meaningfully means to me. So
absolutely,
I think it's a better way of capturing it. Thank you for that.
Yeah.
Perfect.
And then if you go, you can go to the next one also here really quickly. So we talked about what a good value promise is. Some of you did this, but this is like I know the animations look shit, but it's really important to know that we are driving home important points here. I am telling my client, I am presenting to you as a consultant a 4-year strategy that's going to give you the things that are going to help you address your primary problem. And it's going to help you become like the global service provider of internet. And it's giving you the KPIs that I'm going to promise you for this case. Guys, and I'm 3 slides into this case, and I've already gotten my judge on my side because they're like, whoa, look at those margins and market share, right? And I've quantified it immediately, right? Dominant market position by 2023. This is in one slide. I've got buy-in from all of you. A lot of you missed this. And this is on slide 3. So I've already given situation analysis and where I'm taking you before I've presented anything else. Continuous buy-in. Every slide needs to get buy-in. Okay. Yet you can stop sharing, because I'm going to actually go and show you guys what I meant by analysis, or some examples of analysis, deeper analysis that we could have done. And you'll see this and be like, wow, that was so easy. I can't believe I missed that. It's so simple, but it's 100% just buy-in. Just buy-in the whole time. Okay. Okay, can you guys see my screen now online? All good. Okay. So guys, last time we talked about some examples of analysis that you can do. Okay, some of you did. Okay, some of you did Pestle, some of you did Porter's 5 Forces. I think in this instance, I would have started with something elementary, okay, which would be my value proposition. This is not the same thing as value promise. Value promise is, as a consultant, what value am I promising to my client? Value proposition is, as a business, what is our unique differentiator that keeps our customers coming back? Imagine if the first thing that I presented to the board or my potential client is, wow, guys, look at all the things you're doing so well. Okay, I'm already getting them married to me. They're like, damn, she sees us. She knows what we're doing. Okay, so instead of telling my client, you're not innovative, saws, I'm going, wow, guys, look at you. You're literally getting to money without borders because you do price really well. Your speed and convenience right now is great. It's not actually great. Like, but this is what they think about themselves, guys. If you read their case, these are things they believe. I didn't make up these statements. This is they're like, our value proposition is that our transparency is great and speed and convenience is great. So I'm starting here. See, I'm like, wow, great business. This is an example. But then my next slide, I slam them. And I'm like, but is it really true? Okay. Literally, I pull up our competitors and I say, bam, guys, like honestly, from a price point, you're basically the same as our competitors. From a speed standpoint, Western Union is crushing you. Okay. So I think like those things are great aspirationally, but honestly, we're not much better than our competitors. So now I've done a quick competitor mapping. And they're like, oh shit, like Shivani's right. We didn't think about these things. Okay. So now they're bought in. Guys, I've bought them, I've roped them in. Okay. Then next I go, but more importantly, guys, the total available market of remittances in the world is $574 billion. And you know how big our market share is? That's us. Fuck all. Okay, I don't know if, yeah, literally, it's less than 1% of the total available market. So you know what? What has just happened for my audience and my judges? They realize, they're like, wow, we have really not tapped into this existing market, but we're already worried about Bitcoin. Not Bitcoin, blockchain, right? Like, wait, let's not worry about blockchain. Blockchain technologies can take 90% of this market, and we'll still have 10% that we can tap into. You have so much room to play in this massive market. You really don't actually have to be worrying about competitors chomping down your throat yet. You have a massive market, right? So number one, large untapped market. See how easy analysis is, guys. I'm coming to you. Yeah. Can I just close this part? And then two, I'm like, and as we look at our markets where we play, damn, 78% of our clients are European and 22% is rest of the world. So that also leads me to believe that I'm actually not tapping into a massive unserved, underserved, maybe migrant labor market in countries like the US, the Middle East. Like, wow, I really need to diversify my actual markets. So in this one tiny slide that took me 1 minute to put together, I've driven home two powerful points. It's a massive market where we can play, and we're sure as hell not diversifying our market or where we're playing, right? Tracy.
In a case comp environment, how do you quantify the time Samsung? Is it from the case?
Yeah.
Will this info typically be in a case?
All of this was in the case. Everything that I'm presenting right now was in the case, quantifiably. Yeah, I would never make it up. Sometimes I might say things like, oh, the US market is 350 million people because I know this number, okay? So you need to be able to know like, oh, South Africa is 50 million people, therefore the market is whatever, right? In this case, we knew how much the remittance market was. But guys, look at this at the bottom. None of you did this, right? When you're doing analysis, you need to pull a takeout box for me and be like, what is the point? What is the so what of this slide? So it's not just presenting data and barraging my peeps. I'm literally like, take away this point and remember it and put it in a red box there. So that's, if they take away anything, they only take away that one point, okay? And then I go to my business model. Thanks, Team 7. I'm looking and I'm like, okay, well, our actual business model is this, but this is a huge flipping problem because in countries like South Africa, Philippines, Mexico, a lot of people aren't sending money to the US. So this exchange pot theory that I had isn't really working because these poorer countries are not really sending money to the rich countries. Okay, this model worked really well for us in Europe and the UK because yes, it might work there, but it's not working in these bigger markets or in these migrant markets. So this is actually my key issue because this is my primary business model, but it's not working in most countries outside of developed nations, right? So that's it. Remittance inflow pot is way bigger than remittance outflow pot. That is my actual problem. Guys, look at this. These are not fancy analysis. I literally just copy pasted shit on there. Then the final thing I would have liked to see a little bit of from you guys is if any of you made a case for a new product or a new market. Okay, if you said we're going into the US or we're developing this new, you have to do an Ansoff's matrix. Okay, that's a minimum. Have you guys heard of this? Did you guys do marketing or like, right? You guys know these. Later, you'll also do the Boston matrix. It wasn't so relevant in this case, but that's when you want to look at which of your products you want to offload and which new products you might consider. Okay, so here, that's why I was able to knock your recommendation team 5 very quickly, because I was like, guys, you're suggesting new product and new market. That's impossible to execute in most instances. And that's like one of your primary strategies. Sorry, right? So, and this also would have been a good thing to say, okay, Europe is our biggest market. We know the market really well. Let's test out a new product in our European market. Oh, but maybe that's also a risk because we don't want to lose this big market. But this is a good way to just slap this on there and then have some analysis. Okay, I'm going to go into key issues. For me, as mentioned, I think by VZ also, the #1 issue was the liquidity problem. And you guys will see the sub-bullets actually address everything that you guys saw as your key issues, but in sub-bullets, okay? So the inflow outflow was a big issue because there's not enough currency in the different countries, and exact currency matching, which is their whole business model, okay, is not possible in inflow outflow countries where it's the smaller countries, right? And the problem here, VZ mentioned, is the exchange charge is borne by us. That 3% charge is borne by us. If we're trying to get to 0, guys, we can never do that. If we get to 0, we'll be paying for this business. Our business is going to be paying to exist, which is stupid, right? The fundamentals of a business is to become profitable eventually. That's #1 for me. From my analysis now, you guys will also agree with me, is for me to say, wow, we actually have a massive untapped/underserved consumer segment. Okay, we need to diversify our market, and we've only tapped into less than 1% of the total remittances market. I don't have to worry about competitors or a bunch of other people yet because I haven't even gone to 1% of the market. What am I worried about? Let me at least expand my business. And it's not unfathomable because we're already growing at 50% every year. We are growing because it's a huge market and we're doing something super innovative. And finally, we're not tapping into a big part of the segment, which is the migrant worker segment. So how do we solve for this? And maybe our liquidity inflow outflow solving can help this because the migrant laborers are actually sending their money to these complex countries, right? And then finally, what does the client want? Their aspiration is race to 0, okay? A lot of you frame this as like operations, and that's what it is, right? They can't get to 0 because of operational costs. So maybe all these regulatory issues, having a massively expensive regulatory team in each country is eating into my costs, okay? The check challenges are eating into my costs. Marketing is getting expensive for us, okay? And maybe a solution to all of this might be the opportunity of blockchain, okay? Because that might help us reduce our other costs. These are just sub-bullets to the bigger issue. They weren't the issue themselves. So for those of you who put regulatory issues and technical and security challenges, I think those were like minor red herrings. They weren't the primary issue. But this is my opinion. Challenge everything, okay? Okay, yeah, go for it. Zindile, sorry.
The race to 0, is that even realistic? Because how are they gonna have any earnings if they go completely to 0 or almost to 0?
There are quite a few industries that actually have business models like this. So if you also look at, say, Robinhood in brokerage in the US, the brokerage costs of the share transactions have gone, was also in a race to 0 in the US. And they basically have a model where they don't charge for brokerage, but obviously they have to then earn money in a different way. So in that case, so in Costco's case that we mentioned earlier, they've got a subscription model where everyone pays $50 a month or whatever it is to be able to shop there. In Robinhood's case, it's a little bit more complicated, but their flow orders, they deal with hedge funds and basically it's almost like this where they make money by selling the order flows to other hedge funds and other institutions. So they don't charge their clients. So in this case, where you want to get to and what their aspiration is to not charge their clients. But part of this case is how am I then going to make money? So that's the question. You have to make money, but you have to be quite creative in how you're doing it. And that's part of there are companies that do solve for it in other industries, and that's what we have to come up with here.
And that's where things like value-added services come in, right? So, okay, if you're a regular TransferWise customer, then you get a TravelWise card when you travel, and maybe that's where you make money. So there's lots of, and they did actually mention a bunch of other products that they were monetizing already that were in addition to trying to get the exchange rate to zero. So that would be a part of the recommendations I would have liked to see is an alternate revenue stream. Tracy.
Just a comment. So I actually work for a company that doesn't charge customers at all. And it's like a total category education thing from a marketing perspective, because people are like, what? You actually don't charge? But we work on a breakage model. So you kind of still have
Can
to
you
like,
please speak to the mic?
oh, sorry.
Okay.
I was just saying that I work for a company that doesn't charge customers, and you have to educate from a category perspective that it's not a scam. Like, we really do not charge you, but you have to let them know that there are other costs involved if they don't play the game.
I think maybe even Capitec, if I'm right, doesn't charge
Yeah.
a bank fee anymore, right?
Yeah, I actually wanted to ask that the raise to zero, because I've bought into the Capitec Promise, and in essence, what they've done is simplified banking and become more transparent. So maybe the raise to zero is an overpromise. I think simplified banking or simplified transaction, which are transparent, is probably a better suited promise. So I just to test the thinking. And then secondly, it seems now, businesses, I was looking at the Checker 60/60 business case the other day, and they're moving more to subscription. So it's, they're trying to move away from the pay-per-use to subscription, which I think, and you're probably better placed to advise, that's a better money making strategy in terms of consistency rather than a variable, which is pay-per-use. So yeah, those are 2 points. I don't know whether you are able to talk to those.
I mean, I agree with, I think absolutely a subscription model is even a possibility in this instance, right? They might say something like unlimited exchanges in exchange for a $10 a month subscription fee.
Yes.
So I 100% think so. I just put raise to zero on here because it's their aspiration. They mentioned in the case numerous times. So I'm like, you see, you'll read it in the case, but it doesn't have to be the only solution. Yeah, BZ. And then Simpiwe, I think.
I wanted to ask.
The mic.
No, I want to ask, isn't compliance a big issue? Because if you might get fined, suppose your company is used for terrorist funding, for instance, when you get fined or shut down or something like that. So isn't that a big issue because you might not exist anymore? You might be shut down.
I think it is, this is a complex, it's the banking industry. I know what you're saying. I just think that's like business as usual, okay? Like, I think I should have, if I'm in the banking industry and the finance industry, I should have like a legal and compliance team who's perpetually doing this. This isn't an innovative solution to the problem of sustainability. Do you know what I mean? Because our actual problem isn't whether we're compliant or not. We're mostly compliant. Every now and then we might partner with dodgy people, but even in the case, it actually, if you read the case, it only gives one example of a kind of dodgy reputation, but they said we're willing to go with it. And to hedge against that, they've informed all of their clients that we are using this dodgy bank as a partner. The risk is yours. I think that's what they said in the case. Yeah. So they're addressing it, but I don't think it'll help them be a sustainable business model.
It's also very
Sorry, VZ
Sorry,
is
Shivani. I just wanted to go back to the raise to zero, which is very much aligned to the previous question. Is it wise, in inverted commas, to actually tell them that your aspiration is not realistic or you don't really want to shoot down your client? So instead of saying raise to zero, for instance, I would say simplified or whatever I propose. Is that a wise thing to do to your client? Because obviously that's an aspiration that they would like, but it's not really realistic.
I think it's realistic, and I think it's
Oh, it is, okay.
100% of the cases. I think it's going to be unwise to tell them it's not. They've probably got more experience than you in this industry. You have to be you can make that case, but you got to know your shit then if you want to make that case. I as we spoke now about other businesses that have zero cost for their clients, it is possible. It's almost necessary, because if you don't get there, then maybe blockchain becomes more of a threat. If you can get there, blockchain threat isn't that big anymore. So I think you should aspire to get there, and I think it is addressable through other sources of income.
Okay,
I wanted to
perfect.
make just a point on the regulatory issues, which is it's kind of one of those issues that's in the back of your head, but you can't address it that well, because it's not a solution to say, okay, we got to set up a compliance department that speaks to the Reserve Bank. It's not. That's you can't build a strategy around that. It is a risk of the business model. I would rather almost again lay a trap with that, because a lot of the people are going to go to the blockchain. So I'll speak about it, and I'll speak about the compliance risk and how we think blockchain is even more untested. And I'll use some of the examples that we currently have. And as Shivani said, we only had 1 or 2 cases where it was an issue. So I would play it down a little bit, but make it big for the blockchain alternative, so that whoever comes after you has to face those questions. And then at the end, after financials, you usually have a risks and contingencies slide that addresses some of these type of risks that you can't really build a very solid, someone did, but I don't think you can build a very solid strategy around compliance risk here. Even you're going to have better KYC, your customer type processes that you're going to build in, but it's not a good solution. But I'll then address that at the risks and contingencies right at the back, to not miss it, but also not make it the focus of your presentation and your solution.
Thanks, VZ. Decision matrix, again, guys, just pick 3 to 4 criteria that you think your customers care about, your client cares about, and then definitely come up with alternatives and present why your top 3 were the best. So 2 teams did it, and I just wanted to showcase that you can do it in the simplified format, which I also love visually, and then or you can make it more complex with like numbers. I don't know what the scale was here, but also I can see how you guys were able to come to a decision. But always make sure that you actually, if you're going to lay down alternatives, guys, you'll see in the MWeb deck, please go refer to it. You actually must, just like you build out your recommendations, you must build out your alternatives. Okay, even if it's just 1 slide, because you can't just throw a name on there that's like a whole other strategy and then not explain it. Okay, so have a slide for what your alternatives were that you considered, and then using the slide, you can explain to your judges why you decided to not go with it. Okay, alternatives, for example, in this instance, genuinely, we talked about this last time, one of them could have been do nothing. It could have just been like, guys, you're crushing it. Like, you're doing okay as is, ride this wave out, do some other things in the background. You can choose to do nothing. Okay, they are already a growing business. It's fine. That could have been an alternative. Okay, you could have had an alternative of acquiring maybe a blockchain company who already knows what they're doing. Okay, you could have had the alternative of innovating, which is come up with your own new product, new maybe blockchain technology, anything. Or finally, you could have had an alternative to have a strategic partnerships. Any of these 4 things could have been your actual recommendation, or they could have been your alternatives, but it is important to give 2 or 3 nice alternatives. Okay, so Rex.
And again, with the competition, you obviously thought about quite a few options that you can do. Some of your competition in the actual case competition will use those alternatives, and they will make their case around those alternatives. So what you want to do at alternatives is give very strong reasons for why you thought about it, why you thought it was good, but why it wouldn't work. Because the guys coming after you, they're going to say that should have been the plan.
Sorry, I just have a question about like gameplay, right? No, I project. Am I projecting? Hi. So I just have a question about gameplay, specifically about the role playing, especially that the other group did in terms of the allocation of resources. So like there's a lot of like gameplay recommendations you guys gave, like the management of alternatives and showcasing them to annihilate the competition, as well as the assumptions deck, which I wrote down as being a key place to house things like business as usual assumptions. So for us that have no industry knowledge, we can make the assumption that regulation is actually business as usual. So you should be doing this. So it eliminates a lot of the red herrings we could have. But then this sounds like a whole 9 to 5. So like, does this sit with the implementer role or the facilitator role within the comp situation so that it frees up finance and strategy and so on to focus on our dedicated direction and our recommendations and the key issues we had. So someone else in the team is like, okay, you're responsible for like taking the other people on. Am I making sense?
No, it's all throughout the entire, it's no one's role. It's
everybody's
it's
job.
everyone's role in every section. I mean, if you do obviously think about it a little bit more from the finance side, but as you do more cases, and I don't know if you're preparing for competitions, but you'll learn a lot about the other roles as well, and it becomes blended a little bit. The implementation person might say we're gonna launch stores, so we're gonna launch some concept stores first, and we're gonna do it for this and that reason, and they'll make the case your competitor's going to launch these stores from day one. They'll make the case for why it's important to be conservative because you're not going into an untested market. Some example like that. The finance person will look at where we're going to raise capital, and everyone here is just assuming we're using the finance capital we raised recently, but maybe the project is so big, or maybe the capital markets are quite easy at the moment. There's a lot of investment money focusing on these type of opportunities. Maybe we should raise more. So it's not only competition, but it's not only about the competition, but you always want to be thinking about what the alternatives are and why you're not using it. And if you do that well, you're going to answer those questions for the competitors. But also, it's not only in a case competition framework. It's also if you go back to your business wherever you work, you come with your presentation of how to address the solution. You have to address the CEO, your boss, whoever's the board of directors. They are also going to have those same questions about those alternatives and why this and not that. So that becomes very important. So it's not only, you don't want to bash all the alternatives just because someone's presenting after you. You actually want to have a solid case for it, because it's something that you're going to have to do in real life as well.
I also want to. I feel like crushing your competition is mostly VZ's vibe. I agree with this. I also want to say, I think the second point of what VZ is saying, if you are really good about the solution you develop and it's really like articulate and whole and you've considered all the things, this will just come naturally. It's because you've thought about the alternatives and you know they're not right. So it's like it becomes organic. Yeah. But it is important to consider alternatives. And you'll see, for those of you who got bashed with your Rex, it's because you didn't consider alternatives to come up with the best solution. You just slapped like your top 3 solutions on there. Yeah, possibly, I don't know. Maybe. Oh, sorry. Okay, so just my Rex would have been, in the beginning, I think like, to address the cash inflow outflow issue, you're going to have strategic partnerships within the countries that you're in. The way I kind of saw this happen is maybe you have like a bank who already has like a bunch of the local currency and you partner with them. And then once a quarter, once every month, you do like bulk exchanges at a very favorable rate. So it's not that 3% exchange that you're paying. Maybe you can lower down that exchange rate to like 1% or 0.5%. Negotiate something favorably. In addition to that, did you guys read that when they did the partnership with the French bank, they got access to their 15 million customers or whatever? I was like, that's flipping genius. So in these countries that you don't have a market presence, you don't even have to do marketing, because now you're actually telling the consumers of this bank you've partnered with that, hey, your friends and family who live in America can send you remittances through our partnership, and then all of them become your clients on TransferWise. It's like a brilliant, actually, strategic, synergistic partnership. That would be my number 1 rec. And it's short to midterm to address the inflow outflow issues. Because although blockchain might be your long-term goal, I've put it here long-term, we can't ignore it if that's where technology is going. It has to be long-term, and it's going to take super long, guys. So it's not, you can't do it tomorrow, okay? And even if you did a blockchain recommendation, I would have liked to see details like, okay, but how? Okay, are you acquiring a blockchain company? Are you doing like a partnership? Are you innovating yourself? Are you going to have your own blockchain team? You have to really get into the nitty-gritty of it. You can't just say blockchain and then leave it, okay? And obviously, as mentioned before, if we are going to zero, guys, I should have, at a minimum, all of you should have had a product diversification recommendation on there on other ways that you're going to make money if your exchange fees are going to go to zero. Yeah. Okay. I'm not going to take too much time because I want VZ to take on the meat of this. My last thing is just implementation. Guys, the way you actually do implementation slides, and again, it's on the MWeb deck. It's really, really important that you really flesh the hell out of at least one of your recommendations, which is your key recommendation. You guys heard me gun you where I was like, well, what is your primary rec? Pick one and build it out, okay? So the way you build it out, and we call it the 60% rec, okay? You better make sure that that implementation is linked to your owner's conundrum. It's solving primarily your owner's conundrum, and it's linked to the key issues you're trying to solve, okay? You need to explain, even in the implementation, point out, when we do this, it's going to address that key issue I pointed out 5 slides ago, and has to have complete details. So if you're saying we're doing a blockchain partnership as your primary recommendation, I want to know which company. Okay, so for example, you guys use PayPal as an example. So I know it wasn't realistic, but it was good. You know, you guys were so specific in that, but be as specific as possible. If you have a marketing strategy, which channels are you using? What is your 3-month TikTok strategy? I want to hear that level of detail in this 60% implementation. The next implementation is a 30% implementation, okay? This is like the mop-up crew. So this implementation is going to address all the other niggly wigglies that you said are key issues, but maybe your primary implementation doesn't address. So if you said some of your key issues are regulatory and technical and security challenges, oh, I'm going to make sure that our regulatory team is really bolstered and we have one regulatory person sitting in every country that we operate in. As an example, it's a really shitty recommendation, but it's the mop-up crew, okay? And then the last one is an exciting recommendation, but you don't go into too much detail. This is like the really sexy, innovative, where are we going? Something like the TravelWise, for me, would have been like the 10% recommendation, which is like, in the long run, to create a monetizable strategy, like a revenue strategy, we're thinking about introducing TravelWise for the global traveler. And you leave them with like a hint of the future, but not too much detail. And you say, but this is something that we're going to flesh out. This is in our 5-year strategy, not in the near term. Yeah. This is how you do good implementation. I'm now going to leave it to VZ to talk us through financials. Are you ready? Do you need a slide? Oh, you already have it. Plug it in here. But guys, VZ is gonna, it works. VZ is gonna go over all of this. For me, the number one thing as a non-finance person, I always want to know, how are you funding your strategy? Just always end or start your finance with that, for me. Cool. Which one are you? This one.
So as promised, I won't do the entire 70-odd slides, but I've got in here quite a few examples from other cases. Is that better? Can you hear me? I'll send. He was the natural presenter. And,
Is that better?
I don't know. Can you hear me? Yeah, can you hear me? I'll send out the deck here, and there are quite a few examples in there, and it's just useful to go through some of the examples. All those examples are from the competitions. They're from like the semi-finals and the finals. You'll see it. It's quite shit. The hurdle rate is quite low, so it's we are able to improve a lot on it. I'm going to go through this, and I'm going to go quite quickly. But the first thing first, if this is a prep for a competition.
VZ, you're not sharing.
I'm not sharing.
No. I'm still
On the
the
screen.
audience
Sorry.
screen.
Okay.
Maybe stop sharing and reshare.
See it now?
Yes,
Right,
thank you.
So I think it's in a competition. mindset, it's obviously important to just think about how these things get graded in the end of the day. You get 20 points, 20 out of 100 for analysis and alternatives, 25% for recommendations. Implementation, finance is part of implementation. Questions, which focuses a lot on how you implement, how you fund, how you think the model is going to play out, and the actual presentation skills, that's about 55%. So at first, the analysis, alternatives, and recommendations, when you're inexperienced and you start learning, you spend a lot of time there, but that's really just your buy-in. That you're not going to win the case there. That gets you to the table. You're going to win the case through implementing very well, through developing a very good action plan, and through fielding the Q&A, building a good model, and obviously your presentation skills, which helps a lot. But my point here is a lot of people focus on analysis, alternative recommendations, kind of the nitty-gritty of what we're going to do, SWOT analysis and all of that. You waste all your time on that. That's almost expected as buy-in chips. You're not going to win there. You're going to win with your actual good implementation plan. Also in real life, I mean, you'll present to your boss an idea for your business. He's not going to worry so much about your pestle analysis. He knows that stuff. You highlight the two important things, and then you speak about how you're going to achieve this, what it's going to mean for the business. So, then when you get into the finance section, and in the presentation, it's quite short, but in Q&A, it's usually quite long. A few simple questions that you want to answer. You've got a few simple slides on that. It's a budget slide. What are we going to spend our money on? You speak about AI and machine learning and blockchain and what else. What is it? What am I going to spend on? What is it going to cost me? Each of these things. Where is it going to go? Is it going to go to employ new people? Is it going to go for marketing strategies, paying it to Google to advertise online? What exactly am I going to spend money on, and how much is that? And you've got to take into account the context of the business then. Understand how much I'm going to spend, how big is the business. It doesn't help if I've got a 500 billion business, I'm going to spend $2 billion. It's not going to make a difference to my business. You're wasting my time. So you have to take into account the context of the business. Okay, how am I going to fund this? Where's the money going to come from? Obviously, you can raise equity. You can fund it through your operational cash flow. You might have some cash in the bank. You can raise debt. There's several different options. You got to speak to which. And this is usually quite short and obvious, but sometimes more complicated. But you got to think about what is the best source, the cheapest source for this type of project. So obviously, the more risky. If it's a really risky blockchain thing, the bank's not going to lend us as much. So again, keep into account the rest of the case. How will it impact the drivers? I'll speak to that a little bit later. But as I mentioned earlier, you want to get into the nitty-gritty with the drivers. I don't want to see a revenue line growing with 50% because that's the trend. You want to show, okay, I've got 100 customers, it's going to go to 200 customers because my marketing strategy is going to reach 400 new people, and I've got to have a conversion rate of 25% because whatever reason. This is such a good strategy. So go to the nitty-gritty of it. It's not about having a chart of revenues going up. You want to explain the actual drivers of the business. Obviously, when you have those, and there with the drivers, you're going to have to sometimes make some assumptions. Some cases don't have financials, and you're going to have to build financials. So you're going to have to think quite creatively about how you're going to build that out. Then you want to build your model and actually show what my return will be. The first thing is you and your bosses have got this great idea. It's going to cost us $1 million or $1 billion or whatever amount is. What's my return going to be? 10%, 50%, 100%? What's my return going to be? And there you also have to take into account again where the business is, who the stakeholders are, what is realistic. So there you can take simple guidelines in terms of what you'd expect similar businesses to deliver. And then for the last slide is what can go wrong. That's your risk and mitigation.
Sorry, when you say what is it going to deliver or how much, I think there's an assumption there that we're starting with a lot of just knowledge of customer, retention, acquisition rates from marketing strategies. But if we don't come from a marketing background, some suck.
You can thumb suck as much as you want, as long as you're right. You're
What?
gonna, you're
What do
gonna
you
make
do
a-
when you don't know? I suppose that's my question.
You don't, I wouldn't, so if I don't know what a reasonable, if I don't think I can motivate a reasonable conversion rate, then you have to look for a different way to make your point. So it's going to depend case by case, and that some of those examples will maybe help you. Yeah, you could say, you're going to have to make some assessment of how big the migrant community is in or Europe, in those different parts of the market. How much of that market share can you get? So Shivani spoke about a massive market that's 800 million, whatever. The market that we're playing in currently is much more defined. It's Europe and UK. So get to those moonshot recommendations, but currently we can make some assumptions. And even if I say, right, I think in the UK there's a 10% migrant community, might be 20. I'm not going to say it's 50. Right? So you can make an assumption. You can state that it's an assumption, and sometimes in the assumptions, I usually give some reasons. So if I'm not 100% sure, we're doing some research on it, we're working with 10%, but we think it's between, let's say we're working with 10%, we think it's between 5 and 15% of the population. They can try to challenge it. I don't think any of you can challenge it if you know better facts, but try to be conservative, and you're going to try work with a range. If you're not sure, work with the range. Be more conservative. Be more creative in how you actually. So you know how many customers they've got. I think they've got 4 million customers, and we figure out what's the current penetration, because then I can reverse engineer how big the market is. So you also try to, if you don't have one solid thing and have that knowledge, maybe I can work with assumptions from different fields. So I know the population, I think maybe it's 10% of the UK population. I know I've got X amount of customers. Doesn't mean that that then means that, let's say the UK is 100 million people. I think 10 million people are migrants. It's 10 million. I've got 4 million customers. 40% penetration. That seems unlikely that I already have. You've got different parts of the puzzle, and you try to triangulate, but it's difficult. Some cases are really, really difficult, and then you try to be conservative. Remember, this is what I always say to case competitions. Your competitors have they've got the same case. They're going to struggle with these same things. What they usually do in competitions, they're way too aggressive, and they don't. It's unrealistic. So if you can show that you're realistic and you thought about it, you're halfway there. It's tough.
There's 2 questions online, or 2 people have their hands up.
Okay.
Guys, can you unmute yourself?
I'll start. My question is just, I mean, obviously this is a competition scenario. And I understand we have to be more conservative than, unrealistic. But so in the real world, when you're working for a consulting firm and you're taking the presentation to a company, is it? I'm not sure, but I'm guessing that you would have done your research and you would be very confident about the projections and the numbers of clients and things like that you give them. Or is it also usually just a little bit of a guesstimation that is reasonable? Or would they really spend a lot of time into researching, what the market's like?
In the real world, in the real consulting engagement, where someone's paying you a lot of money, hit those numbers. About how big the case, the potential market is. You're going to do the work then. In a case where you got to build financials with limited knowledge, that's where you're going to thumbs up. In the real world, you're going to give real answers. Cases you be a little bit more lenient on yourself. But there's obviously a lot of research then in the real world. You do this
there's a ton of research to figure out how big is the opportunity set in Europe, in different countries within Europe, where the migrants, where do they come from? So in the real world, you say, okay, Germany's got the biggest migrant. You're going to do this work to figure out where is the biggest migrant population, where do they come from? Yeah, we don't know all of those things, so we make some assumptions.
Easy, but in case of like really disruptive technologies or innovations or ventures, then you have to do some amount of thumb sucking, like in the real world also.
Yeah. Sometimes you can't prove everything, and then you state your assumptions. Why? And then sometimes you can do work on the assumptions. I don't know what the answer is, but I can do enough work on my different assumptions to say that they're reasonable. So.
Would you also propose like to do a pilot to establish a baseline?
Yeah, not as you can, but obviously it's not going to be your main recommendation. So in this case, if for me personally, the blockchain thing would have been kind of a threat on the horizon. We don't understand it. We might want to do some pilot there. That's the 10% recommendation. Want to address it, but you don't have all the answers, and you're going to do some sort of testing. In a case you can't, obviously, want your 60%. You want to be quite solid in your 60%. You want to issue how you're going to go to market, all the different minute details in terms of the new products that you're going to launch, why it's going to work, who you're going to target with that. So in the case you're going to put that in the bucket. In real life, there are things that you can't address that you're going to figure out how to monitor or to track or to address in the future, but you can't always address everything.
So sorry, just getting back to the competition, could you, in your presentation, act and say, we did research and we came up with, do you know what I mean? So it's an act, and you're saying that what your actual estimates is coming from a fictional research. Could you say?
They pay you to do the research. So in one of the cases, part of the recommendation was to do research. It's never a recommendation. They already paid you in a case study competition. You, the consultant, they paid you to do the research. So you would go in as if you've done the research. I've gone to the European market and the UK market. I've looked at where the different migrants kind of concentrate, where they come from, where those populations are, and that's what I'm going to target with my marketing strategy. So you'd present as if you did do the research, and hopefully,
okay, great.
It need to be roughly right. Can't be wrong. But otherwise, you wouldn't make them. You'd focus on those things that you know.
Thank you. That makes sense.
Quick question. So if we bring implementation together with the hands-off matrix and you're embarking on a new product or the innovative section of that, will that also always be the 10% or the 20% implementation because it's a new market? And would you like to keep that 60% something in an existing market, something that you already have information on?
And VZ and I will always disagree on this one. I'm going to be honest with you. He hates it because I'm always like going innovative balls to the wall solutions, and he always wants me to be practical. So I think we'll have very different answers.
And we hear both.
Remember the judges, financial people coming from Ernst & Young and the CFO of Bombardier or whoever else, financial people, they want to know how they're going to get paid. You can't show them how they're going to get paid with the moonshot. So the moonshot is the 10%, and bread and butter is 60%. Because you can also build it out much better usually. It's much more realistic. If you brought a new product to market, so you've got X amount of clients here, you think you need to monetize them better, you're going to charge them zero for their transfers, but you think you can launch some ancillary products or new products that they, as people that work across borders, might find useful. You can be quite creative about your tactics without being creative about your strategy. That is it's an obvious strategy to bring them new products. You can be creative about how you bring the product. But you can't really, and that you can build out then because you can speak about how you're going to market it, how you're going to price it, how, operationally how it's going to work. So that you can build out much better.
It's also more realistic. And the
moonshot usually has too many variables to bring out
the case it's time.
But we did, so we had in our semifinals, we had a case called AXA. It's a really like archaic insurance company. They suck and they're dying. And,
tough case.
And we went hyper innovative in that one. And we said they should do the discovery model, which in America and Canada, nobody knows about. So it was like very far out for them. But we went with that because we knew we could build out that recommendation really well because we knew that context in South Africa. So in this instance, it was a very far out strategy. It was very crazy, but because the whole team was bought in and we fleshed it out super well. And
we copied something that already existed. They didn't know. We had a lot of good insights about that.
Yeah, but
so that's why I say you have aggressive tactics, conservative tactics, novel strategy, boring strategy. You've got a novel strategy doing something new. You got aggressive tactics. I hope you're a genius.
Yes, in that.
If you're not, don't do it. But there are maybe each of you have specialities and you know something that no one else does. If it happens to be a case and it's specifically in your field and you're working on it, you could do it. You could pull it off. Usually, if you have a novel strategy, you have conservative tactics. And then you should be already know what you're talking about to make that realistic. Usually, it's best to do, I say, eat your meat and potatoes first. Do the conservative, obvious things in the case first and do it well. Then you do the nice, the nice innovative stuff on top of that. But most people don't even get the basics right. Get the basics right first. It's not. It's easy part. Do you get it right? You can, if it's a very, very complicated case, you might use a boring strategy and conservative implementation or tactics. If you have a boring strategy, aggressive tactics, so you can get quite creative on your actual tactics, how you implement it. And there you can have, on the micro, you can be quite creative. If you feel you're too aggressive, just have solid KPIs and alternatives. If you think something can go wrong or someone can challenge something, yes, it's okay, we think this can go wrong. Or the judge asks, we think this or that can go wrong, and we're going to measure this KPI. If this KPI hit that level, we know we have to make that point. All strategy and all of these kind of recommendations are uncertain. Judges know that whoever your CEO, whoever, they know there's uncertainty in the future. You can address it. How am I going to address that uncertainty? A lot of time, people are almost too confident and it's going to work. Launch a blockchain platform. Chances of winning there is low. If you still want to do that, just explain that you understand that and how you're going to tackle it. I'll send other stuff. There's actually a few emails that I've just added in here. So there's a lot of stuff you can go through if you're interested. But I want to just make a point here. What I think is the most important thing, most people tackle the presentation and the slides, analysis, alternative selection. They go through the little 10 steps and they forget that all the steps are linked to each other. So you can look at something like sources of financing, you can link it to almost every other side of or other part of this presentation. Most people look at this thing as a linear way of getting or doing it, and the teams are also put in place. So the one guy focuses on one, but the next guy focuses on the next. And I don't have anything to do with my finance guy or my ops guy. This is one holistic presentation or solution that you're trying to get to. So my sources of financing will depend on my analysis. Am I a big business? Am I listed? Am I not listed? Do I have a lot of debt? Is my share price high or low? Will equity holders raise more money? Will they not? Is the global interest rates, is it low or high? If it's high, I don't want to raise debt. If it's low, 2019, 20, I might want to raise debt because it's a great time to raise debt. So there are a lot of things to consider. Sources of financing is usually one word on the presentation. Okay, we're going to use operating cash flow to fund this whole project. Great. if there are insights that you can draw on from using all these different other parts, it counts for all parts of the presentation. The more you can link it, the more you can triangulate between the different parts, the better it's gonna be. Never forget who you're talking to. What did they investors when we spoke about this already? Remember, put yourself in their shoes. These guys they just raise money from Branson and some other guys. What do they actually want to achieve? What Branson and them, what rate of return would they expect on venture capital funding? So that's going to tie into, obviously, so if I always start with this, actually. I always start with this first. Shivani, think from another angle, but I would start and think, okay, you raise this money. It's going to have to, so equity markets deliver on average 10% a year in dollars. When you invest in private equity, venture cap, you're going to expect a little bit more, maybe 15%. In a specific opportunity, maybe it's as close as 18%. I've got to deliver 18%. Right? How much is that? I've got a billion market cap, 100 million cash. So I can now already say, okay, I need to make 100 million profit at some point to make this investment, to let this investment make sense to them. So now I know, okay, I need to make that much profit. Margins in this industry is 10%, 30%, whatever it is. So I know how much revenue I need. But again, earlier we spoke about how big my market is, but now I can work from the bottom up. What are these guys actually expecting from this investment? Remember, they also did their research. So we just read, okay, venture cap investments. These guys did do their research, so we can maybe get some points by working from the bottom up to understand what type of returns we need, what type of revenues do we need, what type of margins will then be used. Does that make any sense? Shake your head, maybe it does. Finance, and I'm going to do a couple of slides. So in the implementation budget, what usually makes sense is to have a line-by-line, there's no right way to do it, but you can have a line-by-line table of all the different things that you can spend money on. That usually links to your implementation plan. Your implementation plan usually has 5 to 10 things that need to happen. I got to find locations. I'm going to build a store. I'm going to develop whatever tech. You've got that table, and usually it's best to put that in the back, and you can speak about the detail later. What we often did was to just put a summary of the 3 most important things in the front, 2 or 3, what that's going to cost, and focus on the timeline of that. So there's a lot you can speak about here, because you can speak about the different. This is remember what case this was? The French soccer club. So you can focus on the different things that we're going to spend money on, but also on when we're going to spend the money. When we're going to spend the money makes an impact on where the money's going to come from. I'm not necessarily, I've got to address the money that I'm going to spend now, these amounts. I don't necessarily have to address the amounts I'm going to spend in year 3 yet. I'm going to have to get together year 1's money. And I speak about what my sources are. But my source for year 1 might be different from my source in year 3. It depends on case to case as well. About what are we going to spend money on that you've got to show. Who gets the bill? Who's going to pay for it? Again, yeah, focus on what type of business is it. Is it a startup? Is it a guide business? Is it a turnaround? If it's we had the GameStop example last year. At the time, GameStop had quite a bit of cash. It was a struggling business. They were basically dying, but they had a lot of cash. So when everyone came with their recommendations, they said, okay, we just use the cash. Might be the right thing, but my share price is at lowest it has been in decades. So is that cash not better spent buying back shares? Simple thing. Or is it, are we going to launch a very complicated strategy for a business that's dying? Maybe the shareholders just want to buy back shares and pay out dividends. So, but at the same time, what I thought then it was You could get debt for almost 0%. It was the lowest interest rates ever. So wouldn't it make sense then for them to raise debt rather to fund this very innovative and complex recommendation with someone else's money? So the shareholders would be much happier with that. Get debt at 0, 1 or 2%. So in many things, it's a simple part of the presentation. Sometimes it's very simple, but sometimes much more complicated, and you just got to think what the best sources are. If you can flesh it out, you can show the understanding judges much better. Speak about the forecast, I want to rather show you. So in terms of the drivers, you can go through the stuff. Time, it's usually number of stores, number of tickets, number of website visits, click-through rates. You can go to and then price drivers. You're going to go price per square meter when you do rentals. Try to get it. You can't always, but try to get it as close as the drivers, because the drivers are what you're addressing. Go through this. We usually had what we did and this is quite a simple slide, but what we often did was to put a model here on one side, and then charts would flick through. One driver here was revenues. Their revenue was growing a lot. So what I wouldn't want to show here is my revenue is going from 400 to 1.2 billion. Looks unrealistic, but the blue part is already the growth rate of the business. That's the trend line. So our recommendation addresses the dark blue slice. So now I can address something much more specific. If it's just shown in one chart, the growth rate looks very high. It's going to go into a few more technical examples here. So you can stop me when it's much. In this case, there was quite a bit of operating leverage. So I wanted to make the point: revenues are going to grow, margins are going to improve because of this reason. Going to the model later. To the judges, and there was one more. There was a debt issue here, so we spoke about interest cover. So you put the model in there, pick one or two things from the model that you think is important, and really focus on that and see if you can visualize those issues.
But also, the takeout boxes at the bottom are really key. You guys see, there's a lot going on, but he's drawing attention to the main point that he wants to make.
Yeah, so here we speak about the cost base and operating leverage. Here we speak about products, new lines, specifically to that recommendation, not really the business as usual.
Okay, so my question was about looking from Shivani VZ at the ends of the spectrum. If the OC is like totally non-finance related, it's kind of about like self-actualization or whatever. And then, but the recommendation in this case is to reverse engineer from a finance perspective back to getting to the OC. Like, how do you approach that? How do you start with the financials to reach something? But
It's a case about self-actualization.
No,
You let Shivani speak.
I mean, I'm just making you know what I mean. Like if it's about leaving a legacy or something like that.
Yeah, think like the EcoAlf case. Like, it was about like sustainability and my child and whatever.
Like environmental impact over time.
So if they care about environmental impact, it's still about the sustainability of the business in the end of the day. So still going to have to, maybe now profit isn't the biggest driver, but existence is. So business might have some advantages from a funding point of view because I get cheaper green funding in this business, which make my hurdles a little bit lower, but I still need to profit in the end of the day. Need to exist and actually deliver that value proposition, whether it's a business type value proposition, or if it's a good or green or non-profitable business. You do get some cases that are not financial at all. I remember we did that Greenpeace thing, and then you wouldn't build it out. So that wasn't. So if it's clearly not a financial case, then obviously all of this is relevant. But 95% of the cases will be something about a business needing to make money. It's some unique things.
that you've got to win.
Those are sometimes the hardest because this is kind of the normal steps that you will do a case or use to the normal tools that you'll use in a case, and then you get a case that's not about a business, it's about an MPO trying to save their image.
So you have to
Sorry to interrupt, VZ. We're struggling with the audio online. Like the mic keeps dipping in and out, so we're missing
Okay.
quite
I'll,
a
I'll,
couple
I'll
of
hold it.
chunks of
I'll hold it like this then. It's fine. Thank you for
Thanks.
letting me know.
I think I just want to say in that instance, for VZ, it'll be difficult. For like a person like me, I would love that case because then I'm not constrained by the finances of that situation. So that's why I think when you pick your team, or even in a work situation, it's so important to have balancing team members and personalities, because then you can come up with a really good, well-rounded idea. Because somebody like me would go really wild with like the innovation or like the creativity, but you need the practicality as well.
The teamwork becomes incredibly important. Scenario, when we had our first case in Canada, it was an agricultural type case where the 3 girls in my team didn't have any interest or knowledge. I come from a farm, so I had a few ideas about that. When we came into the final, it was some fashion. I didn't even know. It was a fashion thing, sustainability. I didn't know what the hell was going on. You could still figure out the financials, but obviously I didn't know anything about marketing a fashion brand. So you're going to rely on someone in the team, hopefully knowing something about that industry. Also, this is obviously a very specific type of finance and blockchain type case. So hopefully you have someone in your team that can take the lead on that. But the diverse skill set in your team is very important if you get to choose your team.
Can I just ask about, a lot of this is about growing, obviously, top line for profitability, but is it ever a good idea to focus on the strategies that also secure the bottom line? I know you can't save yourself into prosperity, but not ever kind of relevant. I've just seen things go up.
Yeah, I mean, that's kind of the common theme of MBA cases, right? Up and to the right, everything is 500% growth on your top line. Many cases are turnaround cases that relies on cost cutting and other type of strategy. So it depends on the case.
We had that with GameStop where we had to decrease our revenue from the brick and mortar shops, and then we had to increase revenue in another. But we did have to close. We had to close like 500 stores. And
that's a business in transition, moving from brick and mortar to a more dual business model with some stores and more online income. So you're going to have your old part of the business shrink, and you want to show then that you understand that stores are not going to go down, transactions in the stores are going to go down. So there are all kinds of cases. I think half of the cases are probably growth type cases, but there are a lot of businesses that are in transition phases where you have to then address that. And that's where I think it helps to be realistic and tied back to the units, because 90% of your competitors or other people are going to show that chart up and to the right. If you can show you have a better understanding, I'll go down. This was just before I get there. This is a risk mitigation. Basically, what I just want to say is focus on tactics and not strategy. So what you see often is people get to risks and mitigation and they point out a massive risk in their strategy. Maybe this whole strategy is not going to work. You can't really address it then in the slide. So you're more raising red flags. So you want to focus on the actual, as much as you can on the tactics rather than the strategy. So what I mean by tactics is the details of the implementation. Maybe I'm marketing on TikTok and I don't know, something specific about that makes that I can't reach my target market. It gets blocked in South Africa, it gets blocked in the US, I can't reach my target market. What am I going to do then? I'm going to go to Instagram. So that's something I can address. If I come to this point, which is kind of the second last slide, and I raise a risk, and it's a risk to the strategy, then it's usually quite difficult to address. And again, yeah, you can, if you thought about other risks that you think your competitors might not, you try to break their cases in this slide. We've got 5 minutes. I'm going to just go through a couple of slides to give you, spoken a lot, but to just give you some examples. This was the eGolf case that we did in the final. I started with a assumptions case. And here we had very little assumptions slide, sorry. We had very little financial data in the case, so we had to build it from scratch. So we started with store count. They wanted to roll out new stores. So I say my target was 20 new stores in 5 years. Why do I? Well, we had 5 stores in Spain. In the first year, I think we had 5 stores already, and then we said, okay, we're going to roll out 20. So that seems reasonable or achievable. Cost per item, they speak about their different products. Their product range between $39 and $180 per product. So we took the midpoint of that. So we started there with all little bits of info that we had to. So we had the sales per store per day. So and we calculated the average cost per item. So I know how many items I'm selling. So that becomes important when I have a growth strategy and I'm going to sell 10 times more products. No, I'm not selling 5 products, I'm selling 50. Can my factory still make 50? Can I still produce it? So if you can break it down into these things, and you can, I started putting these rationales in, especially if it's complicated and you're making more assumptions, put the rationale in so that you can speak through it in a competition scenario and that you can explain to them why you think it's reasonable. So yeah, we didn't have any margins. I worked on a 50% gross margin because I know most these type of, I don't know much about fashion and about eco-off, but I know most of them about 50 to 60% gross margins. So starting with 50 rather than 60 is a decent, probably as good as you're going to get. So we built out full financials, didn't have a lot of time, highlighted 2 red blocks around store revenue. So I didn't even focus on total revenue, I focused on store revenue. I already sold you on the 25 stores. So we're going to focus on how we're going to get the store revenue up on the top line. The operating profit margin, you see in year 1, we actually have a dip, that kind of makes it quite realistic in many cases because year 1 I'm investing. Mostly everyone shows, okay, year 1 I'm making 50% more and 50% more the year thereafter and another 50. But usually in year 1, I'm investing heavily in marketing and stuff like that. Take into account, you can show, okay, year 1 is going to be a bit tougher. We're going to make these investments. It's going to come through and it's going to impact our margins. We're going to see margins increase from year 2. Simple points like that just to make it realistic and make sense. We speak about the return on investment. Again, it'll depend on the return on investment that I'm forecasting will depend on a large extent on what type of financing I use. Make it realistic. This is just where you anchor yourself in. If I a return of investment of 70%, usually unrealistic. Like you can't make such high unless it's a really, really risky thing. And I want to show, okay, I think my base case is going to be 70%, but it's very high risk, obviously. Otherwise, I wouldn't be able to achieve these returns. So then what you can do is you can include scenario analysis and say, okay, base case is 70, but there's a scenario where the uptake is 50% and not 80. And in that case, I'll only make 20% returns. So if you get to high numbers, use scenario analysis to show different scenarios and what can go wrong as well. There are different ways to calculate or show expected returns. Some people do DCF models, some people do NPV models. Easiest way for most cases are actually businesses that are going to be sustainable into the future. So it's not a project with a timeline. If it's a project with an end date in sight, then you'll use NPV or something like that. But most cases has a business that's going to be hopefully sustainable in the future. So the easiest way to do that then is to use your run rate, your earnings power in your year 5, what you think after all these investments are done, what your actual earnings power is, divided by the cost and get easy ROE type calc. That's usually the easiest way to do it in very little time. The most important thing about it is make sure it's a reasonable number. Again, the cost budget and stuff like that will also depend on the size of the business. So again, you go right back to the start. If it's a 100 Rand business, you're not going to do a 1 Rand project. And if it's a 100 Rand business, you're not going to do a 200 Rand project because it's way too big for you. So be realistic in terms of how much you get to spend. We used to do it right at the beginning and say, okay, this is where we are. I'd say to implementation, but we can spend $50. It already feeds into our strategy because we only have $50, or whatever amount you get to. I'm not going to go through all of this. This you can go through in your own time. These are the slides that I refer to. These are the slides used in the competition. I put my comments there. So you can see some of the slides to use it both as see what they did and how to actually visualize it, but also where it didn't tie up. This was Disney.
Can you just contextualize? So basically, guys, the finals and semi-final cases from all competitions in the past are all posted online. So he's just pulled in their winning and losing slides here, so you can see they're not. These are not our slides.
These are other teams. I mean, these are the teams that actually made the final, so they did quite well. And obviously, you make these mistakes. I'm kind of nitpicking in the slides, but obviously, you do it under a hell of a lot of pressure in a very short period of time. I'm not saying better or much worse. It's just this was Disney. They spent 2.5 million, not even billion. I mean, what project is this? Disney wouldn't waste their time with this. It's just a simple thing. You get to financials and you show something. It shows you didn't understand what this is about. This week, over days. They did the MPV on the 2 million profit for 500 billion company. Doesn't make any sense. You can go through this yourself. You'll get kind of the flow of how most people do the slides. There's a cost slide. Some of them have assumption slides. And I looked at this again, and the guys that actually gotten through the rounds, those were the guys with good assumptions. Most guys don't have assumptions. They start with costs, they go into revenue. You go up and to the right. They didn't add. They had some drivers which was slightly useful. I'm not going to go through all of this, but there's a lot of stuff that'll give you an idea of what people do in the actual competitions. You can get some ideas from that for your own cases going forward. As for Shivani is, but some ideas and tips from this. I'm going to pause there because otherwise I'm going to go to 71.
And we're going to make, and BZ is going to make all of these slides available to you guys, so you're welcome to look through them.
Thing is, we can't, you don't always have a person with financial backgrounds and are like doing PE ratios and things. It's very natural to some people. It's just not for me. Are you allowed to like create your own little templates? If I wanted to create, I don't have fun. Can I go in with the Excel sheets of like, oh yeah.
It depends on the competition. Our competition, you weren't allowed to. Everything was from scratch. So you'd hopefully have someone that has some idea about how to calculate the ratios and stuff. But generally with finance, just go back to the common sense principles. How much am I going to spend? Where's the money going to come from? What am I going to get in terms of drivers? How are those drivers going to go into revenues? So go back to the common sense things. Most people don't. If you keep it simple and if you answer those simple questions, that's all they want to know. So you don't have to worry about crazy financial engineering. I say go back to the drivers, show the number of customers that make sense to speaking to.
And I just want to remind you guys, the finance slides are basically at the end, okay? So like if by this point you haven't already bought your judges into your strategy, like no matter how good or crazy your finance slides are, or how complicated, it's not going to help you. So
I think he agrees.
But the finance part is important in the presentation, but obviously all of these things are more important in the room because we think about this in the room already. Shivani says, okay, we're going to go to America now. I say we've got $1 million to spend. How the hell are we going to do that? So it already informs your strategy at that level. It's not about in the end of the day spending 4 minutes going through these 5 slides. It informs your strategy, and if your strategy is actually reasonable and achievable. So it's all of these things. Think about it, how you're going to use it in the room, not so much then it'll come. The presentation will take care of itself. But you want to get these principles embedded not only in the finance person in the team, but in everyone. The implementation guy needs to think, how much can I spend? The marketing guy needs to think, okay, how many people do I need to reach with this? So everyone in the team needs to, at least, whether that's up to the finance guy to remind them, or but everyone needs to think a little bit, how is this going to impact the model? Because in the end of the day, you stand there, the CEO or the owner of the business just wants to know how much money I'm going to make. And I'm going to save the world and all that. No, these are mostly listed businesses raising funding from venture capitalists. They all want to know how much money they're going to make. It's all it's about at the end of the day.
Most CEOs are CAs. Or as I know.
I personally think the case and whatever the landscape is changing, where a lot more cases are like, you saw it in our competition, it's more like sustainability, like hard cases. So I do think that what VZ is saying is from years of study of like previous cases, but even recently, like a lot of them were like post-COVID cases, like humanitarian cases. That's when you can't rely on.
There are more that you want to have a strong case across the board, and you want to take into account the current trends in the market and stuff like that. We had a case, I think it was that first one, that agricultural one.
Yeah, we literally told them to plant a boom spec.
Spec boom. It was a whole thing about carbon, and I don't know, I can never remember the cases. I don't remember one case I ever did. But we presented it. We said we're going to raise funding through green bonds in Europe because we got low cost of funding for those type of projects. So you don't pay a lot of interest when you have those kind of ESG type funding. And there was a lot of money available for that. There is still. So you have a lower return hurdle that you got to achieve. And I think I said, okay, we expect a return of something like 10% on this project, taking into account, obviously, the cost of funding is quite low. And I remember the one judge was one of the finance guys, and he's like, that 10%, I wouldn't do it for 10%. So you can have a green case. That guy that's sitting there from whichever finance department or auditing firm or consulting firm, they're going to ask you, fine, get the green stuff right, but it's only sustainable if you also get the money side right.
I'm laughing because we remember this case very differently. I remember the judges going, ooh, what's spec boom? Because we were like, our solution was so innovative because nobody else thought of that. And it was like so fun for them to like a South African solution. I remember the
we come from a different side of the spectrum, but I think that helped quite a bit in terms of actually we worked together very well, and that helped our team a lot, that we could have these different opinions and somehow find a middle ground. So hopefully in your teams you also get those tough discussions, and then keep in mind that after all of that you still need to show a profit.
Create value. Let's end it at that. All right, are there any other online questions? Yeah, Zindila has a question for you.
Yeah, it actually refers to the team. So when you go to these competitions, how are the teams formulated? Do you guys pick each other? Because I heard you said earlier, you in your second year when Shivani was in her first year. And obviously she was your magic potion. So after you met her, you started winning. So how are these teams?
Yes, fam.
So also how, yeah, because the finance part, you know, if you've got all your whole story together, the finance can quickly unravel you. So yeah, just out of interest.
So we didn't get to, we got divvied up into teams, right? We didn't get to pick our teams. The instructor or the lecturer, the coach that worked with us, basically we had several teams to start with, and he kind of picked from those teams and put us together. And then you always have the risk of people not really see you sitting in a small room for 3 hours. You have a risk of people not getting along or finding the middle ground. There's some big egos sometimes in MBA classes as well, so sometimes it doesn't work. Some teams do blow up. We got
together in a room, and luckily we worked all together. Shivani just told me to shut up once, I think.
Change with Nick.
Okay, cool.
We had another guy on our team who was going to do the implementation, and the coach kicked him out like a month before, I think, the competition, and put someone else in. So, and he was one of those people that maybe was a little bit, strong opinions, which isn't really always tie into the rest of the team. So yeah, to your team, it's important to choose, but I don't know. I think a lot of that's up to luck.
Okay.
Just got to make
Thanks
it
for-
work.
Cool.
Yeah. Send out the slides if there are any questions. You're welcome to ask Bonnie or myself. All the best for the rest of your journey. I think it's one of the best things. These exercises are one of the best things in your MBA. In your studies, you learn a lot, not only about the different cases, but also for me, I personally learned a lot about. I wasn't obviously not such a natural presenter and communicator as Shivani, so I learned a lot from that point of view. You learn a lot about how to work in a team and trust the team. So it's really just an awesome learning experience. It's tough to get some of the feedback sometimes, but it's the price you pay. You're going to learn a lot, and I hope you all enjoy it.
I hope everyone enjoyed it and learned something. Like I said last time, be uncomfortable and just lean into it. A session with Shivani, which is possibly the last one, but we'll finalize that. It's on the 1st of June. What are we doing, Shivani?
So it's actually only about consulting case interviews, but increasingly in industry, almost everybody's using case methodology for interviews. So if you want to learn how to crack the case in terms of an interview context, so this is real time sitting one-on-one in an interview, that's what that workshop is about. So it's called the Case Ninja Workshop. I designed it because I found out that in South Africa, nobody trains people on how to do case interviews. It was wild to me, and that's a big thing in the States. So that's what it is. It's literally like, how do you tackle a case in an hour in person with the other person sitting in the room? That's what we're going to be doing. So if you guys are keen, please all come. And it doesn't matter if you want to be in consulting or not. It is a really, really great way to solve interview problems real time. So I would recommend that you come through. Yeah, it's going to be fun. We'll do a case together real time.
Cool. I remember that one from last year. It was actually, I think I learned the most from that one, just because it's also a little more personal and not so team oriented. So yeah, please, and come in person, please. Those online, please come.
Coming in person is way better.
Yeah, come in person.
We have great biscuits. And Shivani. Okay, awesome. Thanks everyone. Thanks Shivani.
Thanks everybody. I'll send out the resources. Thanks a million.
Everyone, enjoy your day.
I'm so sorry. One last thing. I want to thank VZ so much, guys. Like, seriously, he has 2 kids and it's a Saturday and he's here. I'm so grateful. And he put together a 71 slide deck. VZ, we love you. Thank you. Thank you so much.
Thank you, VZ.
Yeah.
She can sing us a part the rest of the We have to put you behind the Stellenbosch picture.
No. We're like that.
We can do another one without, and then.
I'm hoping with next
Time.